Yes, people, a very happy evening to all of you. So, guys, we are doing this chapter on bills of exchange. And today we are going to begin with the new concept, which is renewal of the bill. So, guys, what have we completed so far? Let's have a quick glance. So, guys, in the very first class, we understood what is the meaning of a bill of exchange and the promissory note. In the very same class, we understood how do we calculate the due date or the maturity date of a bill of exchange or a promissory note. As well, in the same class, we understood how do you do the accounting entries in these four cases when the bill is properly honored on time. In the second class, we discussed the accounting entries for the above same four cases, how the entries has been passed in case of disorderment of a bill. Today, being the third class, we'll be focusing majorly upon completing two concepts, two very, very important concepts from the examination point of view. One is accounting for renewal of a bill, and the sixth one is accounting for retirement of a bill. So in that, the very first concept that we are going to discuss is the renewal of a bill. Now, what happens is, let's understand a scenario. This is a seller. This is a seller, and this is a buyer. Seller sells goods on credit. Goods sold on credit. Right? Now, buyer, in return, he does not have the money to pay on the spot. Therefore, he insists that the goods to be sold on credit basis, which means that the buyer wants some additional time, let's say a period of 1 month or 2 months, to make the settlement of the amount, to which the seller agrees, but on a condition that he would have to execute either a promissory note all by himself, or the seller would give you a bill of exchange to which the buyer has to accept it and give it back. So in either case, the buyer is agreed for it, and the buyer is returned a bill of exchange accepted to the seller. So here, let's suppose that credit period was agreed for 3 months. The credit period agreed was for 3 months. Now, on the due date, the buyer is not able to arrange for the funds. He's not able to arrange for the money. So he voluntarily himself is approaching the seller on the due date or before the due date. I'm repeating one more time. Now, guys, after this thing got over, on the due date or just 1 day before the due date, the buyer feels that he is not in position to arrange the money for honoring this bill. Therefore, he himself takes an initiative to approach the seller and request the seller that, my dear seller, it's a big honor that you've given me the goods on credit, where you have extended credit period of 3 months. Unfortunately, I'm not in position to make you the payment on the due date or the maturity date. Kindly grant me a further extension of, let's say, 1 more month. Now, seller has got two options, either to agree for this or disagree for this. Any businessman, guys, normally would want to have a very good relationship with the another business party. And in business, it is very common that, some people at some point of time might run out with the funds. So as a gesture, seller may agree for this, may agree for extension of the credit period. So if a seller is granting a further extension period, then the old bill gets cancelled, because we have agreed, guys, in the last class that on the maturity date, the validity of the bill has been lost. So any which case, on the due date, the validity of the bill is gone. And now, since the extended period is given, you have to create a new bill. So the process of cancelling the old bill, and in place of that, creating a new bill with the extended period is called as renewal of the bill. It's called as a renewal of a bill. So now here, the old bill loses its validity on the maturity date, and on the very same date, a new bill with a extended credit period of, let's say, 1 month. Extended credit period can be anything that is agreed between the seller and buyer. In our example, I'm taking 1 month. So new bill is being created. So the process of cancelling the old bill and creating a new bill is called as a renewal of a bill. Now let's read this theory. Sometime the acceptor of the bill means who accepts the bill. Okay, now the concept of acceptance, does it come in bill of exchange or does it come in the promissory note?
Bills of exchange.
Bill of exchange.
Fantastic. In bill of exchange, who does the acceptance?
Buyer.
Buyer does the acceptance. So sometimes the buyer, customer, is unable to pay the amount, and he himself, he voluntarily moves, he goes to the seller and tells that he should be given extension of a time. He asks for extension of a time, and in consideration agrees to bear the interest for the extended time period. Now this concept I need to explain. So before I explain the concept of interest, do you guys understand what is the concept of renewal of bill? Hello?
Yes, sir.
Okay. Now let's discuss what is this interest all about. This is the date of issue of bill. Let's say 1/1/2023. Guys, the credit period that is granted, is 3 months. Let's say it is 3 months. It is 3 months. So what is the maturity date? Please calculate and tell me. What is the maturity date?
4th April.
4th of April 2023 is the date of maturity. Which means, guys, on this date, the seller is supposed to receive the money. Unfortunately, in this scenario, he is not in position to receive the money from the customer because customer is running short of money. So customer is asking to grant a further extension of, let's say, 1 more month. He is asking a further extension of 1 month, which means he is now willing to pay not on 4th April. He will now pay on 4th of May. 4th of May 2023. Date of payment. This is the date of payment. So can you please tell me, guys, how much extra time did the buyer take for making the payment?
1 month.
1 month extra. Now, guys, for this 1 month extra, the extra 1 month what the buyer has got, he has to pay the interest. He has to pay the interest to the seller for granting that extension. Now, the logic, we have to understand why the seller is charging the interest. The logic goes very simple, people. See, originally when the goods were sold on credit basis, they had executed a bill of exchange. So guys, bill of exchange is basically a contract. In the contract, very clearly it was agreed that the buyer has to make the payment on the date of maturity, which is 4th of April, during which he has been granted an extension of 3 months. Now, guys, think from the seller's point of view that when a contract like that is executed and when this guy is expecting the money 4th of April, he would have made all the plans and arrangement for further buying of the goods. For example, let's say the seller is in the business of buying and selling laptop. So he has sold his laptop in bulk to the wholesaler, or let's suppose to the retailer. Now, guys, this seller is a wholesaler and this guy is a retailer. So retailer will buy in bulk from the wholesaler and they will sell it to the customers. Now, guys, obviously the wholesaler now in return has to buy the goods from the manufacturer. So he also needs money, right? So 4th of April, guys, the wholesaler would have mentally been prepared that, okay, once I receive money from the retailer, I will again make the payment to the manufacturer and buy the laptops. Like that, he would have made his plans. Now, unfortunately, on the maturity date, on the due date, this particular retailer is coming and telling, sir, I'm running short of money. Unfortunately, there will be a delay of 1 more month. Please grant me the extension. And for a wholesaler, guys, the relationship what he has with his customer is very important. Just because 1 month there is a delay in payment, 1 month delay in payment, now wholesaler cannot fight with the retailer and he cannot lose his customer. So definitely if it's a genuine scenario, the seller would want to consider the request and he would grant an extension. But don't you think from the seller's point of view, since he is not able to get the money on the maturity date, now his opportunity of buying the laptop and selling the laptop during this period, that opportunity is lost. Had the wholesaler got the money, or had the seller got the money on the maturity date, he would have made the payment to the manufacturer, got new set of laptops, and he would have sold this to the other customers, which means during this period, he would have made further money. Or had the seller received the money during this period, the seller would have invested this money, let's suppose in fixed deposit or share market or somewhere, and would have earned something in return during this period. Now, this opportunity is also lost because of delay in payment. So in every angle, if you observe, on the due date, if the seller is not receiving money, he is losing an opportunity to earn in this 1 month. So therefore, the retailer, that is the buyer in our example, is taking the responsibility of compensating the opportunity income that has been lost. That is the reason the buyer will pay interest to the seller for the extended period of time, so that he doesn't feel bad for giving him the extension. He will comfortably give the extension. That is the idea behind collecting or charging interest from the opposite party, which is the customer. Another reason why the interest is charged is because this is a kind of a penalty that we are imposing on the opposite party, so that he will make the payment at the earliest. He will not come with further delay. So that is one reason why interest has been levied. So sometimes the acceptor, that is the customer, is unable to pay the amount, and he himself moves that, or he himself says that he should be given an extension of additional period of time, and in consideration, and for doing this, he agrees to bear an interest for the extended period. In such case, a new bill will be drawn. In this case, a new bill is drawn and the old bill is cancelled. So the process of cancelling the old bill and creating a new bill is called as renewal of bill. If this happens, entry should be passed for cancellation of old bill. Now, if the old bill is cancelled, if the old bill is to be cancelled, we have to pass an accounting entry for cancellation of old bill. So we'll understand that through a practical question little later. This is done exactly as already explained in the dishonorment of a case. Now, at the time of dishonorment, what journal entry you pass? At the time of dishonorment, what journal entry pass? The very same journal entry, you will pass it here also. But guys, there is a difference between dishonorment of a bill and the cancellation of bill. Guys, in the case of dishonorment of bill, the buyer does not even opens his mouth and says that, okay, sir, I'm not paying my money because of so and so reason. Does not open the mouth. On the due date, when the holder of the bill, is going and approaching the buyer or the customer, with attitude, he says that, okay, I'm not paying the money, get lost. So the attitude in case of dishonorment of bill is bad. Whereas the attitude here in case of renewal of bill is very soft. Here the customer himself is approaching on the due date or before the due date, requesting, look at his tone, is requesting to cancel the bill. So there is a difference between the two. But entry will be the same. In dishonorment, what entry we pass, the same entry we pass, because ultimately, whether it is dishonorment or whether it is renewal of the bill, on the due date, when the amount is not paid, it amounts to cancellation of the bill. So for cancellation of bill, what entry we are supposed to pass in dishonorment case, same entry will pass it here also. Guys, am I clear with what I'm trying to say? Hello?
Yes.
Yes, sir.
Very good. When the new bill is received, when a new bill is issued, entries for the receipt of the bill is repeated. So how you pass an entry for the original bill, no? For new bill also same way you will pass the entry. The amount of new bill may represent any of the following. Now, this we'll understand through a practical example. Okay, yes, let's take illustration 15 to understand this. A drew upon B a bill of 60,000 at 2 months, and B returned the bill duly accepted on 1st January 2021. So my question goes to all of you. Who's the seller? Who's the buyer?
A is the seller.
Yes, seller. A is the seller and B is the
Okay, who's the drawer and who's the drawee?
A is the drawer, B is the drawer.
B is the drawer.
Who's the payer? Who's the payee?
A is the payee, B is the payer.
B is the payer and A is the
Who's the maker? Who's the acceptor?
A is
A
the
is the
maker, B
maker,
is
is the
the
maker, B
acceptor.
is acceptor.
Very good. Superb. Now, guys, the bill value 60,000, the credit period is 2 months, and the acceptance was done on 1st January. So when the bill was issued is not given. So we presume that the issue of the bill and the acceptance of the bill happened on the same date, which is 1st Jan 2021. Only one date is available. So we have no other option but to go with that date. Now, guys, A discounted the bill with bank at 15% per annum. So this is which case? Case 1, case 2, case 3, case 4.
Case 2.
Case 2. Wonderful. A discounted the bill with bank at 15% per annum before the bill was due for payment. Before the bill was due for payment, B informed A that he was not able to pay the full amount and requested A to accept 20,000 immediately. On the due date, B informed A that he is not in position to pay the full amount and he requested to accept 20,000, which means out of 60,000, he's willing to pay immediately 20,000, but balance 40,000 is not in position to pay, and therefore is requesting that to draw upon him another bill for the balance amount for 2 months along with interest. Along with interest means plus interest. Now I'll explain this, don't worry. A agreed for it. The second bill was duly met, which means the second bill what was prepared, that is cancelling the old bill and preparing the new bill. That new bill was properly met. Give the journal entries in books of both A and B. Now my question goes to all of you. In this question, there is no mention about notary charges paid to the notary public. So do you think it is like it is a mistake, or they have avoided it, or in this kind of situation the notary would not come normally?
So notary won't come.
I think notary public will come into play only when in case of disorderment.
Exactly. Guys, in case of disorderment, what happens? The person on the due date is not making the payment and he's got a bad attitude. Therefore, to act as an evidence, to when we in case go to the court in future, to serve as an evidence, whoever is the holder of the bill, in those 4 cases, he would get notary done so that it can act as an evidence. But here in this case, what happens is the buyer, the customer himself is coming and telling that on due date, I'm not able to make the payment. When he's voluntarily telling, there is no need, for us or the holder of the bill to, take the notary public alone and get the notary work done. So I'm not saying nobody does. In this case, notary can come. Only if the holder of the bill wants to get it done. Even if it is a request, he wants to get it done, then okay. But 90% of the case, in such cases, the notary is not brought into picture. But don't make up your mind that, okay, in this case, notary will never come. You don't be surprised in question if they give notary public, we have to take care of the notary transactions. But normally, since this is a genuine movement from the customer's side, generally 99% of the cases, we don't go with the notary, drama. Now here the game is very simple, guys. He's telling 60,000 bill value. On the due date, he is able to pay only 20,000, guys. So what is the balance amount?
30,000.
20 is paid balances?
40.
40,000 along with interest. Along with interest means what? Plus interest. So for the balance amount plus interest, you have to draw upon him another bill. So let's understand the sequence. Guys, whenever you get this kind of question, and if you're not able to get a hold of the transaction, it is always better to do a diagram very quickly in the rough part. So here, this is A, this is B, and we have here banker. So guys, the first transaction, goods sold bar purchased on credit. Okay, this theoretical word what I'm doing is only for rough knowledge. When you do it in exam, you don't have to write such a big language. Just roughly for your knowledge, you do it. Don't write it too big. In shortcut, if you can draw this diagram, do it. But in my opinion, you should practice these kind of questions so much now itself before exam, that in exam, there is no need for you to draw this. Everything should happen to your mind. But just in case I'm telling you, if it is confusing, you can still take some time and draw, is what my point is. But in exam hall, you will not have that much time. So it will be really quick. Here for explanation purpose, I'm dragging it a bit. So the second transaction, second event is basically B is accepting the bill and returning back. So bill of exchange being accepted. Now guys, there's a third transaction that is happening between the seller and the banker, which is nothing but bill discounting. So when the bill is being discounted, it is discounted at 15% per annum. Guys, it is discounted 15% per annum. So at 15% per annum. This is the third transaction. So on the fourth transaction, what is happening? In the fourth event, what is happening? There is a dishonorment. See, dishonorment are two types. Renewal of a bill also, it is dishonorment only. But here it is a very smooth dishonorment. It is an understanding dishonorment. Whereas the case that we saw in the last class was a forceful or a bad dishonorment. This is a good dishonorment. So, but ultimately both are dishonorment only. So dishonorment. Okay, guys, fourth transaction is dishonorment, which is cancellation of bill. Now, my dear friends, on the due date, on the maturity date, if the banker does not get the money from the customer, what would the banker do? Will banker go to the court of law and collect the money from the B? What will the banker do? Hello?
He'll collect from A.
He'll collect it from A. So fifth transaction is collection from A. Okay. Now, guys, fifth transaction, collection of A is done. So banker is out of scene. Now the scene is between A and B, that is seller and buyer. Now what is next happening, guys? Upon dishonorment of bill, when the dishonorment is done, a bill of exchange is being cancelled and the buyer, the buyer's, that is the debtor name is recreated. So what will be my sixth step? What will be my sixth step?
A will in turn collect from B.
No, before that you have to do interest calculation. Na? So the sixth step will be what? Interest calculation. Because upon dishonorment, or even before that, wait, before interest calculation. Guys, on dishonorment, two things is happening. One is bill cancel, and second thing is you're receiving 20,000 payment in cash. So two things is happening here, right? So what you can do here is upon cancelling bill, after cancelling the bill, you can first pass a 20,000 receipt entry. 20,000 money is first received. Then seventh entry will be for the interest entry. What is the interest due? How much interest A has to receive? How much interest B has to pay? That we have to calculate. And for these both, we have to execute another bill of exchange. So eighth transaction will be bill of exchange executed. A new bill is executed. And the ninth entry will be honoring the second bill. Honoring the second bill. Guys, this is just a rough diagram. When I do the journal entry one by one, you'll get a better hold. So if you want to make a note of it, make a note. If not, you can wait. I'll do the question. Simultaneously, when I put a tick mark to all this, no, you can make a entry. Let's do it, guys, in the books of A. In the books of A. Format, properly please draw it. Date, particulars, debit rupees, credit rupees. So guys, when the first transaction is happening, the transaction is about A draws a bill. There is no information about the sale or purchase. So can I say we can omit the sale purchase entry, but I'm doing it here only for our knowledge purpose. So what will be the entry on date of sale?
B
B
to
to
sales.
sales.
B account debit. B account debit to sales. What is the sale value?
60,000.
60,000, 60,000. This is not required. We did only for our knowledge purpose. Okay, wonderful. Next, on the date of bill of exchange being accepted. What is that date?
Bills receivable to B.
Date.
1st Feb.
1st Feb. So 2, right? So 1/2/2023.
23.
No, it's not 23.
22, 21.
1121. It is 1121. It is 1121. So what is happening, guys, on date of executing bill of exchange? The
Bills
debtor is
receivable.
cancelled, and in place of that, a bill receivable is created. So bills receivable account debit to B. So in bracket, I'm putting it 1 because this is an old bill, and later we'll have a bills receivable 2, which is a new bill. So this is only for knowledge purpose. So this is 60,000. 60,000. Narration, guys, you'll manage. Hello.
Yes, sir. Yes, sir.
Sure.
Okay. So far, what did we do? When we sold the goods on credit, we recorded this entry. And I recorded bills of exchange acceptance entry also. This is the second transaction. If I go with the flow, what is my third transaction? What happened later? Bill is discounted with the bank. So when is bill discounted with the bank? Can I get to see the due date? Sorry, can I see the date of discounting of bill? A discounted the bill with the bank. Date is not given. So can I presume on the same day the bill has been discounted? So 1/1/21. If a bill is discounted, guys, which means I'm handing over the bill to the banker. Debit what comes in, credit what goes out. So bills receivable is added asset. Credit what goes out. So it will be 2.
Bills receivable.
Bills receivable.
2 bills.
By
Receivable. What is the worth of the bill that you are handing over to the banker? What is the worth of the bill? 60,000. Now against the 60,000 rupees, how much money will you get? Will you get full 60,000?
No.
No, you will get that portion after minusing interest. So I need to calculate interest. So let's calculate the interest below that itself. 60,000 is the bill value. Interest percentage is 15%. So 15% is for how many months?
12.
It is for 12 months. Now we have done the discounting with the bank, which means the banker has given me the money on 1st of January, and banker will get this money back after how many months?
2 months.
After 2 months. So basically bank has lent this money for how many months?
2 months.
2 months. So to the extent of the period what is lent, for that only will calculate my interest. So please calculate and tell me what is the interest. 60,000 into 15% into 2 by 12 in your calculator, please.
1,500.
1,500. Which means from 60,000, if I minus 1,500, that is the money I'll receive in the bank account. That's what you're trying to say?
Yeah.
So
No,
bank
discounting
account,
charges.
Correct. But bank, how much will you get?
60 minus
58,500.
50?
58,500.
500. So remaining 1,500 is nothing but
Discounting charges.
discounting charges account debit. Spelling is correct?
Yes.
Yes. Now, people, let's go back to our drawing. If you go in the sequence, what is the fourth case? Fourth event. Fourth event is dishonorment, which means on the due date, B is saying that I'm really sorry, I'm running short of cash. Kindly grant me extension for additional how many months? Hello? Additional extension? 2 months. So now, guys, which means on the date of maturity, the bill is lost its validity. So please tell me, what is the due date? What is the due date of the bill?
4th
March.
Guys, it is 1st January. 1st January plus 2 months. So it is February, March, 1st of March plus 3 grace days.
4th of
4
March.
March.
4th of March. So on 4th of March, this entry is recorded. Guys, this entry is recorded in whose books of accounts? In our books of accounts. See, upon dishonorment, so this is something which is happening between banker and B. So this we cannot record. We are recording the 5th entry now. We are recording the 5th entry. When the dishonorment happens, now banker, when he comes fighting with A, that day we are talking about. So we are now recording not the 4th entry. Because 4th entry is between banker and B. We are now recording the 5th entry. Collection from A. So now banker will come. What will he do? So before that, knock off the accounts for your clarity. B account is opened here. B account is closed here. Bills receivable account is opened here. Bills receivable account is closed here. Okay. So every account is closed now. Now on the maturity date, which is 4th of March 2021, guys, what will the banker come and do to you? Directly will take the money from your bank account. So what is happening, guys? In your bank account, the money is going out. How much money is going out of your bank account?
60,000.
60,000. Why? Because, guys, banker had paid you 58,500 from his pocket earlier. And now he has to receive 60,000 from either you or customer. On the due date, he has to receive 60,000. That is the condition. So which means 58,500 what is paid earlier is knocked off against the 60,000 payment received from you now. Therefore, he is making a pocket of 1,500. Therefore, he is making a profit of 1,500. Guys, for banker, it doesn't matter whether the bill is honored or dishonored. For that 2 months of credit period, if he wants to earn this 1,500 means he will earn it. That is his target and criteria. Between A and B, whatever be the agreement and terms and conditions, you keep on changing. It doesn't matter to the bank. On the due date, if bank has to receive the money means has to receive. So banker will take 60,000 rupees from your pocket. So bank will be debited or credited.
Credit.
Asset balance reduces. To reduce asset balance, we credit. So to bank, how much? 60,000 rupees. My dear friends, what will you debit?
B.
Now the 60,000 rupees you have paid, that is the money what you receive from the bank you've paid, which means the money which is supposed to originally come from the customer is not come. Without receiving the money, you have closed B's account and bills receivable account. So now we have to recreate B. We have to recreate B. So B's account debit. B's account debit. 60,000 to bank 60,000 rupees. So this is nothing but recreation of debtor account. Please make a note. This is recreation of debtor account. Narration will manage. Hello.
Sir.
Yes, boss. Okay, you said yes, sir. Okay. So first entry, guys, the bill execution entry done, the bill discounting entry done, and on March 4, 60,000, we have recreated the data. Till this also we have done, guys. 3 entries successfully completed. Any problem?
No, sir.
Now, 6th entry. Guys, 6th entry. On the due date. What is the person saying? Look at the language of the question. B informed A that he is not able to pay the full amount. He's not able to pay the full amount and requested to accept 20,000 immediately. He's telling that, see, on the due date, I promised you to pay something. So out of a token of respect for you, I don't want to send empty hand. Please collect this 20,000. See, banker will take 60,000 from A and go off. That game is over. After banker has come and taken 60,000 from A and gone, B started feeling very guilty and bad. So for honoring A, he said that 20,000 rupees I have in my hand. So please take it. But remaining amount I cannot pay because I'm running short of money. So 20,000, please accept. Like that, who is giving money to whom? Hello? Who is giving money to whom?
B is giving to A.
B is giving to A. So which means A is receiving the money. So what will be the journal entry, my dear friends? On 4th of March 21, we are receiving the money. So can I say cash or bank account debit? Account debit. To that extent, I need to close B's account. B's account you recreated here, my dear friends. You created B's account here. This is the money that you are supposed to receive from B in future. From that, on the very same day, you got 20,000 already. So what will be the balance to be collected from B? 40,000. So here 20,000, 20,000. Guys, listen to me very carefully, okay? See, when the sale was done here, what did you do? You debited B. Guys, listen to me very carefully. I'm talking about B, okay? You debited 60,000. Means positive 60,000. Then once the bill was executed, you credited B with 60,000. If debit is positive, credit is negative. So 60,000 rupees you credited B when the bill was executed, minus, therefore the balance in B's account became 0. Then what happened? Here, when the bill was cancelled, you recreated B. You redebited B by 60,000 rupees. So again, debit 60,000, which means plus 60,000 is now the balance of the B's ledger. Immediately on the very same day, guys, B has paid 20,000 to you. So to that extent, the balance what B has to pay will reduce now. So here now, B you have credited 20,000. B you have again credited 20,000. So credit 20,000 means minus 20,000. Now what is the balance that B has to pay?
40,000.
40,000 positive. Can I say debit balance? Hello? Yes or no?
Yes, sir.
Yes,
Sir.
sir.
Till this we have understood the game. Now what he's telling is that, so please accept this 20,000 immediately and draw upon him another bill for the balance amount. Balance amount is what? 40 along with means plus interest of 18% per annum. Now we have to calculate interest on what amount? 60,000 or 40,000?
40,000.
40,000.
Because the extension is given for 40,000. Nah, boss, you got full 20,000 rupees on the due date. So on the due date, as promised, you got 20. Out of 60, you got 20. So for 40,000 only, there is an extension of the period. So for the extended period only, the interest has to be calculated on the extended amount. So the extended amount is what? 40,000 rupees. So let's calculate the interest. Working note number 1. Working note number 1. Calculation of interest. Now please tell me, my dear friends, interest is equal to how much? Sir, 40,000 into 18%. Guys, 18% is for how many months?
2 months.
2 months.
2 months.
Hey, 18% is for 2 months?
For 12 months.
It is per annum. So 18%
Sir.
per annum is 12 months.
Ah,
So 18% is for 12 months. But are we going to pay him the interest for the full year?
No,
Or are we going to receive the interest for the full year? No, it's only for 2 months. So it is 2 by 12. So 40,000 in your calculator, please. 40,000 into 18% into 2 by 12.
1,200.
1,200. Now, guys, on the very same date, that is 4th of March, I need to pass another entry for the interest amount due to be received. So now for A, is interest receivable or is it interest payable? For the seller, interest is receivable or payable?
Receivable.
Receivable.
Receivable. Receivable from whom?
Debtor B.
Debtor B. So if I put B account debit again, I'm recreating B here with 1,200. Do you have any problem?
No, sir.
Because from the person whom I'm supposed to receive that, I'm debiting that fellow. Yes or no? So I need to recover. I'm creating the asset to receive 1,200 in future. From whom? B. So B account is debited. Okay, not okay.
yes, sir.
Okay.
Now, debit you recorded. What will you record in credit? To interest income. 1,200. Boss, for 8 is income, na? Income nominal account, what rule? Debit all expense and losses, create all income and gain. So this entry is nothing but, guys, this is accrued interest entry. Accrued interest entry. So accrued interest, what entry did we learn in 11th standard? Interest accrued account debit to interest income, correct? No? So here interest accrued, we are not creating a separate ledger. We are debiting B itself because interest accrued is the money to be received in future. Here, instead of interest accrued, we are putting in the B account itself because if you put B account debit, you will get to know what is the total amount to be required from him. Now, again, if you debit B here, people, if you debit B 1,200, you come back to B's ledger, you debit 1,200, you will now get to know what is the total money to be received from B. Now, do you understand why have we debited B instead of accrued interest? If you debit accrued interest, then this interest will go to some other ledger. So I have to now open B's ledger and accrued interest ledger and add both and tell that, okay, this is the money to be received from B. So why to unnecessarily create two ledger and create confusion? So both the amount, the original sale value amount and the interest amount, you have to receive from the same person. So record both in the same account so that you will get to know totally in the ledger itself how much money we have to receive from that fellow. That's why B has been debited. Do you have any problem in this?
No, sir.
No, sir.
So guys, the moment when I'm passing this entry, 4th March 2021 entry I'm passing, what is now the total amount receivable from B put together? Total amount now.
41,000.
41,200.
41,000, sir. 40,000 of the bill amount and 1,200 of interest. So 41,200 is totally receivable. On this date, what is happening? A new bill has been executed. A new bill is executed for a execution of a bill on 4th of March 21. What is the entry for acceptance of bill?
Bills receivable.
Bills receivable in bracket number 2, account debit to B. How much? 41,200. 41,200. Guys, so here B you are again crediting. You're crediting B. So again, if I come to B's ledger, what happens? You're crediting 41,200. This is plus, this is minus. So what is the balance in B's ledger? 0. Correct? No. When a bill of exchange is executed, second bill, the B's balance will become 0. So now this 41,200 balance will go and sit where? In the bills receivable 2 ledger. In the bills receivable 2 ledger. Now guys, on the due date, the bill is duly met. Now look at the sequence, guys. We have done the sequence one by one. Come here. Guys, we first recorded the entry for receiving 2,000 rupees. Then we recorded the interest, accrued interest entry. And then we recorded another entry for execution of the bill, second bill. And now we have to record the honorment of the second bill. So you understood the sequence in which I'm recording? Hello? My dear friends?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. So now here again, guys, due date. So what is the due date, guys? 4 March plus 2 month. My question goes to all of you. Will I add 3 grace days or not?
You will add, sir.
100%. Every time a bill is executed, law says that grace days has to be added. So plus 3 grace days. Now please tell me what will be the revised maturity date or due date. So March,
7th of
May 4th, 5, 6, 7. So 7th of May
Yes.
2021, guys, the bill is honored, which means what? We are receiving the money. So bank account debit to bills receivable to 41,200, 41,200. Now with that, your bills receivable account debit and credit is knocked off and the money is finally received. Now tell me, okay or not okay? If you understood this question, 70% also I'm happy. 70%. Okay, not 70%, 50% is. Let me see all those faces once. Navya, 50%, 50%.
Yeah.
Or more than 50%.
I don't know, 50 probably.
See, look at her. Nonsense. Okay, Karunya, Mokshita,
So more than 50.
more than 50. So you're saying for namesake, no?
Sir, I understood very well.
70%, sir.
Mokshita says 70%. See, Navya, 70% people have understood.
So, yeah, okay. I mean, I
I
understood.
think Akash,
but then-
100%. Hey, வேணும்னா லந்து பண்றீங்கடா.
Sir, same me also 100%, sir.
Okay, very good. Yeah, even some, if 100% we understood, I'll be very glad. But 50 to 60% is fine. Why? Because the same question we'll do from B's point of view. So you'll get even more better clarity. The same question, now you will do homework tomorrow again, both A and B's point of view. You'll get 100%.
Huh, sir, if you do, I got 100%. But if I have to do it again, then probably.
This is too much. Too much. I'll not accept it. See, this is definitely a cranky question. So that's why I told, whenever we do a tough question in class, you are trying to receive the concept. So sometimes what happens is in between there's a leakage. You might miss out here and there. So because of that 100%, you might not sometimes get it on the spot. But the very same question when you try to do all by yourself with 100% concentration, you get the flow. So that's why I'm giving you a comfort that even if you understood 50 to 70% now, remaining 20-30%, whatever is there, you'll understand it when you do this very same question by yourself. Am I clear? Other people? Hello? Gunapati, Driza, everyone?
Yes, sir.
Okay. Can we do the same question now from B's point of view? What, man? Nobody's opening the mouth.
Yes,
Will do,
sir.
sir.
Yes, sir.
Same order, same questions, same points. Now, people, the first transaction is happening between A and B for purchase of goods. So for purchase of goods, what will be the entry? I'll do it here, somewhere here. No, there's no space. Easy of here will be too congested if I do. Okay, I'll do one thing. I'll just show that answer from your textbook itself. So guys, goods purchased. What is the purchase entry? What will be the first entry?
Purchase
Purchase to A.
Okay, the first entry will be on the date of purchase will be purchase account debit to A. Since this is not asked, we are not doing it. This only we're doing for knowledge purpose. Okay, excellent. Now, guys, what is happening next? Bill is accepted by A. Sorry, bill is accepted by B. So when bill is accepted by B, what will happen? Now, if you see the answer, no, you'll get deviated. Let's do it here itself. Besides it.
creditor account debit to bills payable.
So I'll just do the entry here, Kana, once again. So first entry on date of purchase. What is the entry?
Purchase to A.
Purchase account debit to A. 60,000. 60,000. Okay. What is the second entry, please? Acceptance of the bill. So this is on 1/1/2021. What will be the entry? Please?
A account debit
Supplies account to bills payable.
To bills payable. 60,000. 60,000. Now, A's account is opened here and it has been closed here. Very good. Sir, then the third transaction is happening between banker and A. Now, will B record this?
No, sir.
Not record. Very good. Now, fourth transaction is dishonorment entry, which means on the due date, this fellow is not paying the money. So what will be the entry recorded by B? On the due date, can you tell the due date, please? 4th of March, is it?
Yes, sir.
What is the due date? Sorry, what is the due date entry? No
Bills
complication. For
payable
this guy is very simple. The bill payable becomes invalid. So I need to cancel the invalid liability. So bills payable account debit 60,000. And I have still not paid the payment to the creditor. So I have to recreate the creditor. So it will be to A 60,000 rupees. Very simple. So now what happens? Bill payable you opened here. Bill payable you closed here. And A you have recreated. The creditor you have recreated. Any problem? Hello, my dear friends.
No, sir.
Okay. Now, guys, after the dishonorment, the fifth transaction is basically the collection of money by the banker from A. Will B record that collection in the his book of account?
No, sir.
Not at all. Then what will record? Sir, after this, the sixth transaction is B giving 20,000 payment, guys. B is giving 20,000 payment on the very same day. So what will be the payment entry? Hello?
Sir, A to bank account.
4 March 2021.
Debit 20,000.
We are making the payment to creditor. So we have to close the creditor account to that extent. So A account debit 20,000 to cash or bank. To cash or bank 20,000 rupees. Any problem, my dear friends? So here you created A's account. So A account was created. A account was created here. 60,000 credit plus. And here A you have debited. You have debited 20,000, guys. 20,000 is debited minus. So what is the balance we have to pay to A? 40,000 is credit balance that we have to pay to A. Then what is the next event, guys? Next event is that we have to calculate the interest payable entry. Interest payable entry. Now, B has to record the amount of interest to be paid in future. So what is the interest payable entry? Interest is expenditure for A or income for A? Expenditure for B or income for B?
Expenditure.
It is an expenditure. So debit all expense and losses. So interest expense account debit. Can I say the interest amount will be same amount 1,200? What is it here? Yes, 1,200. So same 1,200. Yes or no? Hello. And this is to be paid, guys. It is not paid. I have to pay to A in future. So anything that I have to pay in future, I need to create liability. So here the liability will be created in which account? Will you write two interest payable account or two outstanding interest account or two A's account?
Two A's account.
Two A's account. Guys, if you write two outstanding interest account, nothing wrong. But the problem what will happen is, in A's account, the balance payable is 40,000. In outstanding interest account, balance 1,200 payable will come. So if you want to know what is the total amount payable, then you have to take two ledgers and add manually, which is again hell a lot of time. So to save time, what they're telling is that whatever amount you have to pay to A, record everything in one ledger. No. So the ledger balance will give you the total amount to be paid. So game over. So to A's account 1,200. Then what happens, people? Interest due entry recorded. Now we have to execute a new bill of exchange. You have to execute a new bill of exchange. Now please tell me, guys, what is the new bill of exchange value? On 4th March 21, you have to execute a new bill, which means you have to cancel the creditor and you have to recreate bills payable too. So what will be the journal entry? You have to cancel the creditor.
A to bills.
A account debit. Creditor you have to cancel means you have to put in debit. 2 bills payable bracket 2. Please tell me what is the amount?
41,200.
41,200. Please understand, till this stage 40,000 is balance. Then you further credited A with 1,200, which means what? You credited again further 1,200. Now the balance is 41,200, credit balance positive. So this is what we are capturing it here. Now what happened? On the due date, they're telling that the bill has been honored, which means the bill has been paid. So what is my 7th entry? What is the due date, please? What is the revised due date?
7th of May.
7th of May 2021. You are making the payment. So you have to cancel this bill. You are settling the liability. To close liability, I have put in debit. So bills payable to account debit to what?
Bank.
Cash or bank. 41,200, 41,200. Game over. So 41,200 is the amount to be paid. So the moment you recorded this A in debit, 41,200 in debit, negative, balance here itself has become 0. And here you're closing the bills payable account. Game over. Any problem, please? One person has left the meeting. I don't know who's that. Gunapati. Okay. Tell me, people. Any doubts in this question, please? Hello?
No, sir.
No doubt, sure.
Okay. So let's do question from scanner. So first question, guys, of ICA study module, we have done it in the last class. Vijay Soul goes to Preetham. This is renewal, right? It's not retirement of bill. Yeah, it's renewal of bill. So can we do the second question now? Hello?
Yes, sir.
Yes, sir.
So please take a second question of your ICA study module. It says that Vijay sold goods to Preetham on 1st September 2019 for 1,06,000 rupees. So who's the seller? Who's the buyer?
Vijay is a seller. Preetham is the buyer.
Seller, buyer. Preetham immediately accepted a 3-month bill. So what is the credit period of the bill?
3 months.
Okay, what is the term of the bill?
After date.
Since nothing is mentioned, after date. Wonderful. On the due date, Preetham requested the bill to be renewed for a fresh period of 2 months. So can I say this is a question of renewal of bill and the extended credit period is how many months?
2 months.
2 months. Vijay agrees to provide an interest of 9% per annum, which was paid immediately in cash. Please be very careful with the language. In the previous question, out of the bill value of 60,000 rupees, 20,000 was immediately paid. So balance was 40 in the previous question. So when a new bill was created, they said that the balance amount along with interest of 1,200, which is 41,200, please create a new bill for that, they said. In this question, what they're telling us, Vijay agrees to provide interest 9% per annum, which was paid immediately in cash, which means, guys, the interest what due entry you're calculating, no? So one, you will calculate the interest due entry. Immediately the interest is being paid, which means you're creating the second bill for what value? Are you creating for only 1,06,000 or are you creating bill for 1,06,000 plus interest? I repeat my question one more time. In the previous question, when you recreated a bill, you created the bill for the balance value plus interest. So you created for the interest amount as well. The bill was created for the original principal as well as for the interest. Now in this question, will you create the bill only for 1,06,000 rupees or will you create the bill for 1,06,000 plus interest?
Only 1,06,000.
Only 1,06,000. The voice is very dull. No confidence.
No. Only 1,06,000.
Only 1,06,000 is what Navya says. Others?
Yes, sir. Only 1,06,000.
Then what happened to interest?
We paid immediately.
It was
So
paid immediately.
So immediately interest is paid means interest payment entry should come. So you have to remember that sequence. To this, Preetham was agreeable. The second bill was met on due date. Give the journal entries books of Vijay and Preetham. Let's do it, guys. Let's do it. Vijay seller, Preetham buyer. Very quickly we'll draw it. Vijay. Preetham. First transaction is sale or purchase transaction. Second transaction is bill of exchange execution transaction. So second transaction is bill of exchange. Then third should be honorment of bill. Third should be honorment of bill. But on the due date is bill being honored. Is the bill being honored?
no, sir.
No, sir.
Bill of exchange dishonored. So dishonorment ka entry. Then once the bill is dishonored, you close the bill, you recreate the debtor and creditor. Then what will happen? Next stage. Fourth is interest due entry. Interest due entry. How much interest we have to calculate. And then immediately there is interest payment entry. Interest payment entry. This is the next. We have to go in sequence. And interest payment entry. Then next is once interest due is calculated and interest is paid, the balance interest will become 0. So what is the bill amount that we have to create? For the balance 1,06,000 rupees. For the 1,06,000 rupees bill you have to create. So new bill created. Sixth entry is new bill creation entry. And the seventh one is new bill honorment entry. New bill honorment entry. Any problem? Please make a note of this. Please make a note of this. There's a sequence in which the journal entry has to be done. That sequence has to be very clear. See, sometimes you might be very good at journal entry, but how, in what order to write, what to write and what not to miss, that is something where people struggle. So this order and without missing the journal entry you have to write, no, that is something is very important. Just knowing what to debit and credit is not sufficient. Guys, can I do the entries now? Hello?
Yes, sir.
Okay, in the books of Vijay, please. In the books of Vijay, Vijay is the seller. So on the date of sale, when the goods are sold, guys, here very clearly told that Vijay sold goods to Preetham on 1st September. So I'll record the date of sale also. So 1 September 2019. What is the sale entry, people?
Preetham to sales.
Preetham account debit to sale. Preetham account debit to sale. 1,06,000 rupees. Guys, I hope all of you are able to follow, no? Aditya, Akshara, Driza, Disha, Gunapati,
Yes, sir.
Janardhan, Jivika, Karunya, Mukshita.
Yes,
Yes,
sir.
sir.
Navya, Akash, Shai, Sanjay, Selina,
Yes, sir.
Yes, sir.
Nidhi, Subiksha, Swati, Vikashni, Yogi.
Yes, sir. Yes, sir.
Okay, okay. Very good. So guys, if I come in the order of the question, I have recorded the sale entry. The sale entry has been recorded. Now, bill of exchange execution entry. So when is the bill of exchange accepted, executed? Nothing given. So on the same date. So 1/9/2019. What is the bill of exchange execution entry?
Bills receivable to Preetham.
Bills receivable account debit to Preetham. Very good. 1,06,000. 1,06,000. Wonderful. Then guys, what is the next event? Third event is what? Dishonorment. There is a dishonorment. Guys, this which case is this? Case 1, 2, 3, 4. Which case is this?
1.
Others?
One, sir.
One, bill is held till maturity. Very good. Case 1. So what is the due date, people? What is the due date?
4th December.
1 September plus 3 months plus 3 grace days. September, no? 3 months. So October, November, December. So 1 December plus 3 grace days is 4th of December. Am I right? Hello?
Yes, sir. Yes, sir.
On 4th of December, when the bill is dishonored, people, what will be the dishonorment entry? Preetham account is opened here. Preetham account is closed here. So
Decrease of data.
yes, so you have to recreate Preetham. You have to recreate Preetham because we are yet to receive the money. So Preetham account debit, we are recreating the debtor, and the bill receivable is losing its validity here. It's become null and void. It is useless. So that asset which is useless, I need to close it. So two bills receivable, I need to close it. So bills receivable account you had opened here and I'm closing it here. So Preetham account is still open and pending. So dishonorment entry over. Next one is interest due entry. What is my interest due entry, please? On 4th of December, interest due is to be received or to be paid?
Be received.
Okay, so what will be the entry?
Preetham to interest.
Okay. Sir, we have to receive this money from Preetham. So anything that you have to receive in future is asset. So asset you record in the Preetham's account itself. So Preetham account debit. And this is income. So to interest income. To interest income. So what is my interest? So 1,06,000 rupees into what is the interest agreed? 9%. 9% is for how many months?
12
12 months. But here we are giving extension for 2 months. So additional for 2 months, you have to calculate the interest. So into 2 by 12. So what is the interest amount, please?
1,590.
1,590.
1,000?
590.
1,590. Okay. So 1,590, 1,590. So this entry is done, people. Now what happens is that the question very clearly says that, sir, the interest is being paid on the spot immediately. So what is the interest? Opposite person is paying and we are receiving. We are in the receiving end. So on the same date, 4th of December 2019, we are going to receive this money. So what is the receipt entry?
Interest to cash or bank.
Right. Receipt will come to
Preetham.
interest to cash. Huh?
Bank.
Bank to
Cash
Preetham.
bank to Preetham.
Bank.
Cash to Preetham.
Cash or bank account debit, because we are receiving money. Debit what comes in? To Preetham. 1,590, 1,590. So let's understand this one point. Guys, Preetham was debited here. So 1,06,000 you debited here, add. Then here Preetham was 1,06,000 credited. So 1,06,000 credited minus. So balance became 0. Then again you recreated Preetham by putting in debit. So 1,06,000 you recreated by putting in debit, positive. Then again you debited 1,590 Preetham further because he has to pay us interest. So 1,590 further you debited. So total amount that was recoverable from him was how much? One lakh 1,790. No.
So correct, sir. 1,07,590.
1,07,590. 7,590. Correct?
Yes, sir.
Then Preetham account was closed to the extent of 590. So 590, 1590. Again, you credited Preetham minus. So what is the original balance? 1,06,000 rupees. So what is the money receivable from Preetham so far? 1,06,000, for which you are creating a new bill. So now, guys, on the very same date, 4/12/2019, you are recreating second bill. So you're closing Preetham account. Preetham is asset. To close asset, I have to put in credit. So Preetham account debit to bills payable or receivable?
The bills receivable to Preetham also.
Sorry, Preetham is asset. So to close asset, I have to put in credit. Sorry. So it is to Preetham. To Preetham, 1,06,000 rupees. And in place of that, you're creating a bill receivable. So bills receivable to account debit 1,06,000 to Preetham.
Sir, I have a doubt.
Yes, boss.
Sir, in the last before entry, like Preetham to interest income account.
Preetham to?
Interest income.
Yes, boss. What is the doubt?
So actually, you're debiting Preetham account.
Correct.
Instead of what you're actually doing that, you said something.
See, normally, see, this is interest due entry, interest income. Have you received this money?
No, sir.
No, as like when I'm passing a due entry, you have not received it. So this is, can I call in the 11th standard, we call this as accrued interest?
Yes, sir.
So entry in 11th, what we studied is accrued interest to interest income, correct?
Okay, sir.
So here also you can put accrued interest, not a problem. But the problem what will happen is that, so 1,06,000 rupees is hanging in Preetham's ledger. 1,590 is hanging in accrued interest ledger. So I have to manually add both and tell every time that how much money is to be received or paid. So unnecessarily, it's a double headache now. So instead of creating a accrued interest ledger and unnecessarily creating two parallel ledgers, record whatever is receivable from Preetham in Preetham's ledger, everything. Because ultimately, 1,06,000 Preetham only has to pay. 1,590 also Preetham only has to pay. No. So if you record both in the same entry, I'll get to know the total amount to be received from Preetham. Now.
So yes, sir. But if it is in normal case, if it's just an income and not accrued income, we'll just see cash to accrued income, and it will be closed by the P&L entry. That's it.
Come again. I'm not clear with what you just said.
So, like, if it's not an accrued income, I'm just for clarification, sir. If it is not an accrued income, we just do like cash to interest income, and the account
Yes.
will be
Okay,
closed
I
by
got
P&L.
your point.
That's it.
So guys, here what Subiksha is saying, sir, here interest is received now. So why are you creating a due entry and then later you're doing a interest receipt entry? Why can't you combine both entry? Am I correct, Subiksha? That's what your question is?
Yes, sir. We're just like receiving it.
So when I combine both entries, so Subiksha says we can combine both entries now. So when you combine, what will happen? Preetham is gone. So what is the balance? Cash in bank to interest income. Cash in bank, you can do it. But why are we not doing it? Because guys, we always have a habit. First, we create a due entry. Then followed by that, we create always a receipt and payment entry. And one more reason why I'm asking you to do the due entry is because if you're habitual to due entry, so in question where the payment is received or not received, in that case, you will know that the due entry has to be passed. So two motive, guys, whenever you pass a due entry, like is normal concept, even if you receive the money. If you remember, in the fundamentals of partnership, what we learned, whenever any transaction happens between the firm and the partner, you always have to pass a due entry and later receipt or payment entry. Same concept here also. This is a due entry. We are recording how much money is due to be received from Preetham. I agree that the very same transaction or the next transaction, we are collecting the money and closing it. So instead of passing two entries, can we combine and pass it is your question. We can do it. But always the habit is that you pass a due entry, then followed by the receipt or payment entry. Second reason of doing this is because if you don't have the habit of passing the due entry, in exam, there is every possibility of you forgetting the due entry in case if the payment is not received on spot. For example, in last case, if you see, the interest was not received on spot. It was to be received along with the bill on a later date. So that time you will forget to pass a due entry. So to make it habitual, I'm putting the seed in your mind that whenever interest is coming in the concept of renewal of bill, you pass a due entry. So that seed I'm putting it, you will never forget it. So whenever renewal happens, whenever the interest is coming, your mind is very clear that, okay, interest entry has to be passed, due entry has to be passed. If it is received, I'll pass a receipt entry and close it. If not, I'll pass a bill of exchange and convert it to bills of exchange. Now, are you clear, Subiksha?
Yes, sir.
Super. Now, guys, can I go forward? Hello.
Yes, sir.
Now, guys, 4/12/2019, bills receivable to Preetham is done. On the due date, the bill has been met. The bill is honored. So, can you please tell me what is the revised due date? What is the extended period?
7th of Feb 2020.
So, 2 months. So, 2 months plus 3 grace days. So, it will be
7th Feb 2020.
7th of Feb 2020. Now, in exam, please don't do all this drama. This is only for your knowledge. I'm doing it here. So that you get a vision of what I'm doing it. In exam, you can't do this. You have to put a proper working note and do it, or somewhere in the main working, you have to show the calculation. So guys, on 7/2/2020, you are receiving money from Preetham. So what will be the receipt entry?
Bank account to bills receivable.
Bank or cash account debit to bill receivable to, which is 1,06,000, 1,06,000. So if you see here, bill receivable account is opened here, closed here. If you look at this, if you come in order, guys, originally Preetham account is opened here, closed here. Then later bill of exchange, first bills receivable one was opened here and closed here. Then Preetham account was opened here to the extent of 1590, closed here 1590. And then Preetham account was opened here again. Preetham account was opened here one more time here. 1,06,000. And this is closed against the new bill executed here. So Preetham account is again closed here. So if you see at the end, guys, Preetham account balance, all the bills receivable 1 and 2, every account ledger balance has to become finally 0. You have to keep this in mind. So keep a check on that. Guys, anybody who's able to follow or not able to follow, can you give me a heads up?
So can follow.
Sorry?
I'm able to follow.
Okay, Navya is able to follow. Others? Hello?
Sir, I'm able to follow.
Able to.
Able
Excellent.
to follow, sir.
Okay, very good. Now can we do the entry in books of Preetham? You got me? Okay. Guys, entry in books of Preetham. So what is the date of purchase? 1st September 2019. So 1 September 2019. Entry, please.
Purchases account debit to Vijay account credit.
Guys, after this, I'll give you a break. Huh? Purchase account debit to Vijay. 1,06,000, 1,06,000. Then what happened? What is the second sequence? First is sale. Second is bill of exchange. You should have the diagram in your mind. So on 1/9/2019, there is a bill of exchange executed. Entry, please.
Vijay account debit to bills payable.
Vijay account debit to bills payable. 1,06,000, 1,06,000. Then what is the third entry? On the due date, what is happening?
Sir, recreation of credit card.
What is the due date? What is the due date?
4/12/19.
4/12/19. So what is happening? The bill is not ordered. Now, as on this date, guys, Vijay account is opened here. Vijay account is closed here. Now, on the due date, bill is not honored. So I need to close the bill also. So bill is opened here. Now close it. So bills payable, 1 account debit, and recreate the creditor. Vijay. 1,06,000, 1,06,000. So bills payable is now closed here, and Vijay account is recreated. Vijay account is now reopened with 1,06,000 at the third stage. This is the reopening of the account. Then what happens, people? Then what happens?
The interest is paid.
Interest. So on 4/12, interest first due, then paid. So what is my due entry? Interest due entry. What will be the interest due entry?
Interest expense to Vijay.
Interest. Who is answering this?
Disha.
Disha is answering. Very good, Disha. Interest expense account debit to?
Vijay.
Very good. To Vijay, 1,06,000, 1,06,000. Wonderful. Next, what is happening, Disha? On the very same date, what is happening? This is the due entry. This is a due entry, DE, due entry. Then what is happening? On the very same day,
To cash or bank.
we are closing Vijay's account because to that extent we have paid him. So we are closing the creditor to the extent of not 1,06,000. Sorry, it is 1590. Am I right?
Yes, sir.
Okay. So to the extent of 1590, we're closing his account. So it is to cash or bank 1590. Very good. Then what is happening, people?
New bill.
4/12/2019, we are giving a new bill to Vijay. So to that extent, I can close Vijay's account. So Vijay's account debit to bills payable to 1,06,000 rupees. Now you may ask a question, sir, can we combine the fifth and the sixth entry together? If I combine the entry together, guys, these both, if I combine together, it will be Vijay account debit to cash to bills payable. You can do this also. And even here, guys, when you're recording in the Preetham's book, no, this entry, the interest payment entry and the new bill creation entry, you can combine these both also, nothing wrong. In your textbook, I think they've combined only in given. Let's check. See, bills receivable, account debit, cash account debit to Preetham, Preetham is added. Bills receivable, cash to Preetham. So the interest payment entry and the bill execution entry, second bill execution entry, they've combined it. We have done it separately. Both are acceptable, guys. Both are acceptable. Same way here also. If you see in a textbook, to cash, to bills payable. To cash, to bills payable. And what is debit? Debit is Vijay account. Vijay account debited with the total value of 1,07,590. So you can pass a combined entry or you can pass a separate entry, whatever you're comfortable with. In textbook, they have combined the fifth and sixth entry. I've done it separately. Both are acceptable. Guys, then what happens? On the due date, 7th Feb 2020. On the due date, what is the entry, please? No response. All of you slept, I know.
Payable to cash.
Vijay to
Payable,
cash to bills.
account debit to cash or bank. How much value? So 1,07,590.
So 1,06,000.
106,000.
1,06,000. Excellent. That's all, people. Any problem?
No, sir.
Then do next question.
After the break.
Yes, sir.
Who's saying yes, sir?
Gunapati, sir.
Gunapati akka video on panunga. Let's see your face. She'll tell sarcastically, yes, sir, you start, sir. We are not human beings. No, we don't need break. Only you're human being. No?
Sir, if you give 5 minutes, 10 minutes.
Do it. Akka?
Sir, if you give 5 minutes, 10 minutes break, it will be delayed, sir, when we end.
It will be delayed. So you can, instead of that, we can do an extra question. So every class, sir, if you cut off the break, one extra question will get easily 100 in the board. Sorry, final exam, CA exams. Correct?
Yes, sir.
Very good. So I'm fulfilling the wish of Gunapati, guys. What do you all think? I was like, sir, what is this?
30 minutes.
Okay, so this is now 7:05. We'll take a break of 5 minutes. We'll come back and continue. Enjoy your break. Sir, 5 minutes break. Huh? Thank you. Yes, people, welcome back from the break. So let's continue with the next concept, because your third question of your ICA study material is the concept based on retirement of a bill under rebate. So this brings to the next concept, people, retirement of a bill of exchange under rebate. So let's understand through an example. So this is seller. This is buyer. Seller would have sold the goods on credit. Goods sold on credit to the buyer. And since seller and buyer are knowing each other for a very long time, and since the amount of purchase and sale value involved is too big, So buyer would have requested seller to kindly grant the credit period, to which seller agreed, because in business you have to maintain good relationship and the customer, should keep on repeating. For that comfortability, it is very natural for the seller to give the goods on credit. But here he gave a condition saying that I'm not giving you a blind risk of credit. Here we have to exchange a bill of exchange or a promissory note, to which the buyer agreed. So let's assume the seller would have sent the bill of exchange. Buyer is accepted and given it back. So here bill of exchange accepted. Bill of exchange accepted. Now let's suppose the term of the bill that is agreed is, guys, 3 months. The term of the bill that is agreed is 3 months. The term of the bill that is agreed is 3 months. Here, this is the date of issue of bill. Date of issue of bill or acceptance of bill, which is, let's suppose 1/1/2021. Guys, the credit period is 3 months. So please tell me what will be the due date.
April.
April 4.
4th April 2021 is the date of maturity. Now here what happens is, people, that the buyer or the customer is granted a 3-month credit period. A 3-month credit period is granted because at that point of time, guys, when the bill was being issued, buyer was not having money and he felt that to arrange this money, he would be requiring 3 months. But however, the buyer had a very good business in the next few weeks and months, and somewhere here on 4th of March 2021, he got the amount in his hands, whatever he wants to pay to the seller. In other words, on 4th of March, by God's grace, he had the funds ready. He had the funds ready for payment. He had the funds ready for payment. So technically, guys, as per the bill of exchange contract, if the buyer makes the payment, on the maturity date 4th of April, seller cannot say anything. But here, the buyer, by God's grace, he was able to arrange the funds well in advance. Now, guys, just because the buyer is having the money in advance, is it any compulsion for the buyer to pay this money now here to the seller? Is there any compulsion that buyer has to pay the money because the money is arranged in advance? Is there any compulsion that the buyer has to pay the money on 4/3 itself?
No, sir.
Let's suppose the seller has somehow got to know that the buyer has arranged the money. So can seller come and tell, now that you have money, pay me the money? Like that, can seller compel?
Sir.
Can the seller compel, please? Hello?
No, sir.
Not possible. Because if the seller compels, buyer says, boss, you have signed an agreement. We have agreed that if I make the payment on 4th of April, you are okay with that. So you cannot demand the early money. But buyer is saying that if you want, my dear friend, seller, if you want, I can make the payment here. So seller, any seller for that matter, will they say no? If buyer voluntarily says on 4th of March, I'm willing to make the payment to you, will any seller who wants to receive the money will say no? Please tell me.
No, sir.
No, sir.
No. So seller says, okay, give me the money. But here, do you think buyer will just pay the money like that? No. He will ask additional interest amount. Can somebody tell me why this fellow is asking interest?
He's making the payment before the due date or maturity.
So what? Why interest is charging? Why does the buyer wants to collect that interest? What is the logic behind it?
If he paid on the due date, sir, instead of that, he would have invested the same in some other.
Very good. Akash, you are saying this?
Sir, yes, sir.
Very good. How did you know this concept of investing somewhere else?
Sir, in recorded classes, you said, sir.
Which recorded class?
Sir, the TS day on 11th.
Okay. You saw that video. Okay.
Yes.
Chalo. Yes, Akash said rightly. Now, very simple concept, guys. Now, if the buyer is not making the payment here, then he will make the payment here, which means the funds what he's got it ready. If he is not making this payment to the seller, he's got this opportunity of investing this money somewhere else. Let's say in mutual fund, share market, fixed deposit, anywhere else. And anyways, he will earn that extra income. Yes or no? So he's telling that, my dear seller, I have the money ready now. If you want, I'm willing to pay, provided you pay me the interest. Now seller is asking, why should I pay you interest? So buyer is replying, telling that, my dear seller, if I don't make you the payment on 4th of March, I will invest this money somewhere else. And you cannot question, because as per contract, you have allowed me to make the payment on 4th of April. So I can rotate this money somewhere else for a period of 1 month and earn that income. However, since you are a very good friend of mine, I am wanting to offer this money to you at an interest. If you are willing to pay me the interest, I am willing to give the money to you. Now, seller will calculate. Now, what will seller calculate? Seller will think that if I get the money here, I will buy the laptops from the manufacturer. And if I buy the laptops of the manufacturer, I will sell the laptop. And when I sell the laptop, my dear friend, the interest, the profit what he will earn is, let's suppose, 10% or let's say 12% per annum. This 12% per annum, in which means it is 1% per month. Guys, 12% per annum means, can I say 1% per month? If your earning is 12% per annum, then interest is 1% per month. Correct, no? 12 by 12.
Yes.
So seller is calculating that if I get this money here, if I get the money on date of maturity, I will invest this money. I'll, buy laptop and sell it. And 1% is the income what I earn. Now, instead of buying the laptop and selling here, if I get the payment here, and if I buy the laptop and sell the laptop, I'll be able to make this 1% income 1 month early. 1 month early. Which means that for earning this 1%, the interest what this fellow is asking is, let's suppose, 6% per annum. 6% per annum means for 1 month, how much?
0.5%.
0.5% is the per month expenditure. So how much extra money he will make it? What will be his net income? 0.5% per month. So during this period, in between this period, he is able to make 0.5% extra income. So anybody would want to capitalize this opportunity and don't want to miss this opportunity. So therefore, if the seller feels that getting the money early, and paying this interest, if he can benefit in some way or the other, only then he will ask to make the early payment and he will be willing to pay the interest. Now, in case by receiving the early money and by paying the interest, if this payment of interest is not beneficial for the seller, he will say, no, I'm not paying interest. You make the payment on due date. So who will ask for early payment? Who will be willing to pay this interest? If a seller senses an opportunity that by receiving the money earlier, I can earn something extra. If I can earn something extra, only then the person will pay this interest money and earn this extra money. If any seller feels that no, during this period, with this money, I cannot do anything, I cannot earn any money, then he will not pay the interest. He will not want the early money. He is okay to get the money at the later stage. So do you understand the mentality? So if any seller is getting the early payment by paying the interest, which means he is a person who is benefiting out of this transaction also. That's why he's willing to pay that interest. So for such people, this concept of retirement of bill of exchange under rebate has been created. Now tell me if you have any problem.
No,
Hello?
sir.
No, sir.
So the previous concept what we saw was renewal of bill. On the due date, I'm not able to make the payment. So extra date extension. That is renewal of the bill. Cancellation of old bill, creation of new bill. Now this is retirement of bill. In retirement of bill, what happens? You make the arrangement of money before the due date. You have the money in advance. For that, the customer is charging interest. This is concept of Retiring bill. Retiring bill means what? Closing the bill at the earliest. Retirement of bill means what? Before the due date, you are closing the bill. That is called as retirement of bill under rebate. So now let's read the theory. We have seen that the renewal of bill, the previous concept, we have seen that in the renewal of bill of exchange, we have seen that renewal of a bill of exchange is made when a person does not have sufficient fund to pay for the bill of exchange on the due date, and he requires a further credit period. In renewal of bill, on the due date, you don't have money, so you want an extended credit period to make the payment. But sometimes, or many a time, instances do arises when the acceptor, that is customer, has spare funds. He gets somehow the extra funds before the maturity of the bill of exchange accepted by him. So before due date, he is able to arrange for the funds. In such circumstances, he approaches the payee of the bill. Payee of the bill means what? The seller of the bill, and ask him whether the payee is prepared to accept the cash. He is asking, my dear seller, are you okay if I make the payment at the earliest on 4th of March? Whether he is okay to accept the bill of exchange before the date of maturity. So why would anybody deny? So you might be asking, why is this guy even going asking? Go and give the money directly. No, why are you asking? Why is he asking? Because the next question what he will ask is, if you are willing to get the early money, are you interested to pay me the interest on the early payment? So in such case, the acceptor gets a rebate. Acceptor means who's the acceptor of the bill? Customer gets a rebate, or you can say interest, or you can say kind of a discount for premature payment, for early payment. When somebody pays you, makes you the early payment, guys, you get a discount. So this is a concept of, if you remember, cash discount. Guys, you remember we studied in journal topic the concept of cash discount. Hello?
Yes, sure.
Cash discount is given for prompt payment, that is timely payment or early payment. So when somebody gives early payment, you give a gift, you give a rebate, you give an interest, you give a discount. So that is what is being discussed here. So the rebate becomes income for the acceptor. For whom it is income? For customer. For the acceptor is income, and for the person who is receiving the money, he is not receiving the money to the extent of the rebate allowed. So that becomes an expense or a loss for the payee, who's the seller. It is a consideration for a premature payment. So interest is paid as a consideration for premature payment. True or false?
So repeat.
Interest is a consideration paid for premature payment. True or false? True.
True.
It here means what? It means interest. So interest is a consideration, or rebate or a discount is a consideration, something you pay in return of early payment, or something you get in return of early payment. Every single line is important. Every single concept is important. If the concept is clear, there's so much of, once again, the background, the story, why I'm giving no, if the story is not there in your mind, guys, you will not be able to relate to the concept. And if a question is twisted and asked, no, you'll not be in position to answer it. That's why I'm telling, please listen to me very carefully and do not miss out on anything. And if you have any doubts, please feel absolutely free to ask me. Yes, somebody question me.
Sir, if seller pays interest to the buyer, how come it is a benefit for the
Seller is not paying interest to the buyer, Kana. Buyer is making early payment. Since seller is receiving the early payment, seller is paying interest.
Then how it will be a benefit for the seller, sir?
Very simple, Kana. So now, if you are making the payment, if you are receiving the early payment, you have to pay interest. 0.5%, you have to pay interest as payment or as expense. Correct?
Yeah.
Correct. For this 1 month, Kana, for this 1 month, if you want to get early payment, you have to pay an interest of 6% per annum. Per annum is 12 months. For 1 month is 0.5%. This is clear or not clear?
Yes, sir. Clear.
Now you are a smart person. Why will you pay chumma extra 0.5% expense? You will calculate telling that. Okay, Subiksha, you are asking, no?
Selena.
Sorry, Selina is asking.
Yes, sir.
Selina, you are a smart person. What will you think? If I am getting the money early, will you keep that money idle with you?
Sir.
You will not keep the money idle with you, no? So what will you do? You have two opportunities. Either you invest that money in the business and earn money more than what you paid as interest, or you invest this money somewhere else in fixed deposit or mutual fund where you will earn more than what you paid. So if you feel that this money what I'm getting 1 month early, and by getting that money 1 month early and investing it somewhere else in my business or somewhere else, if I'm getting an income more than this 0.5%, Why will I say no to this? Obviously, I'll say yes. No, give me the money, because by getting this money early, you're spending 0.5% as expense, and the income what you're earning is 1%. So 1% is your interest as profit income or interest income. So in net, what is your earning? 0.5% is your net income. So by getting some extra money, if I'm getting an extra income for that 1 month, why will I say no? Now you understood how it is benefit for seller?
Yes, sir.
Now, if let's suppose the seller is getting this money, okay, by paying 0.5% interest extra, and he is keeping the money idle, there is no income, then there is no point in getting the early payment. Then you wait for the due date and get the money during the due date. You get my point?
Yes, sir.
Okay. Now let's do one question. Now, illustration 19. On 1st Jan 2021, A sold goods to B for 10,000 rupees and drew upon him a bill at 3 months for the amount. B accepted the bill and returned to A. On 4th March 2021, B retired the bill under rebate at 6% per annum. Record the transaction in books of both A and B. So this is the question. Very simple question, guys. Let's do it very quickly. So this is the timeline. This is the timeline. Guys, on 1st Jan 2021, A sold goods to B for 10,000 rupees and drew upon him a bill at 3 months for the amount. So when is the bill of exchange executed, guys?
So first Jan.
1st Jan 21. So please tell me, if I calculate the, if I'm supposed to calculate the due date or maturity date, what would be the due date or the maturity date?
4th
April, sir.
February, March, April. So 1st April plus 3 grace days. So 4th of April. So date of maturity is 4th of April 2021. Now this gentleman who has accepted the bill is willing to make the payment, or he has made the payment on 4th of March. So 4th of March means, can I say somewhere here? Somewhere here, bill retired on 4th of March. On 4th of March 2021. So can I say, guys, here the buyer is making the early payment. So can you please tell me how much months early is making the payment?
1 month.
1 month.
1 month early payment. So here, guys, the interest or discount or rebate what the buyer will be getting, customer will getting is 6% per annum. 6% is per annum. So for 1 month, how much rebate he'll get? 6% is for 12 months. Then for 1 month, how much? If you cross multiply, you'll get 0.5% per month. Okay, not okay. 6% is for 12 months. 6% is equal to 12 months. And for 1 month, how much? You'll get the proportionate interest 0.5%. Now record the transactions in the journal entry of A and B. So guys, in the books of A, let's first record. In books of A, on the date of sale, guys, 1/1/2021, the sale is done. What is the sale entry? What is the sale entry?
Debtor account debit to sales.
B, account debit to sales. Value 10,000. Guys, on the very same date, the bill is accepted. Bill is executed, accepted. What is the bill of exchange entry?
Bills receivable account to B.
Very good. Now, guys, sale recorded, bill of exchange recorded. If I go in the same order, what is the next event? Where will I stop? 4th of March. Guys, though the due date is calculated, we are not taking the transaction. We are not extending the transaction till the date of maturity, because the bill is retired on 4th of March itself. So the next transaction I'll record on which date? 4th of March 2021, guys. What am I doing? As on this date, B account is opened here, B account is closed here. The bills receivable which is opened here on 4th of March, it is closed. So I will hand over, seller will hand over the bill to the customer and customer will pay us the money. So what is the bill worth which is going out? What is the bill worth going out?
The 10,000.
What is the money that you're receiving? How much is the money that you're receiving? Will you receive full 10,000 rupees? Will you receive full 10,000 rupees?
No,
Oh, sir.
Balance
No.
after.
So 10,000 into 6%. This is interest for 12 months. We want for 1 month. So into 1 by 12. Or we can do 10,000 into 0.5 percentage. Because if you multiply these both, it is 0.5 percentage. So in either ways, what is my interest?
50.
Sorry?
50 rupees.
100 or 50, or 50 rupees? Okay.
50.
Okay. So 50 rupees less I will receive the money, people. So what is the money that I'll receive? What is the money that you'll receive? 10,000 minus 50 is how much?
9,900.
99,000.
9,000.
And 50 rupees is the rebate allowed. Rebate allowed. Rebate allowed is a income for your, expense for your, gain for your, loss for you.
Loss.
It's a loss. So debit all expense and
Loss.
losses. Debit all expense and losses. So cash account debit 9950. Debit what comes in. This is what you receive. Balance 50 you not receive because it's a loss for you. And credit what goes out. So cash account debit, rebate allowed to bills receivable. Any problem? Hello?
No, sir.
Next. In the books of B now. So 1/1/21. 1/1/21. Please tell me what is the purchase entry. Guys, faster. We have to do 2-3 more questions. So faster you cooperate, faster I can complete.
Purchases to A.
Purchase account debit to A. 10,000. 10,000. Then on 1/1/2021, bill of exchange is executed.
A account to bills.
A to bills.
Very good. So when I do that, bills, A account is getting knocked off. A is closed here, opened here and closed here. Then what is the next date? 4th March or 4th April?
March.
4th March 2021. You are receiving the money or paying the money?
Paying.
Paying the money. So to cash, how much you are paying the money? 9,950. What is the liability that we are closing?
10,000.
10,000. So what happened to balance 50?
Rebate allowed.
Allowed nahi. Allowed is for A.
Rebate received.
No.
Rebate received.
Rebate received. So rebate received is gain for us. Credit all income and gain. Credit all income and gain. So we are crediting it. And this is what? Credit what goes out. We are making the payment. So 9,950 we are making the payment. So money is going out. 50 we are not making the payment. So therefore it's a gain for us. So total liability that we are closing the liability is 10,000. So bills payable is opened here, closed here. Any problem? No response from online people. Hello.
Yes, sir.
My dear
Yes.
friends.
Yes, sir.
Yes, sir.
Very good. Third question. In the ICA study module, third question. Can we do it?
Yes.
On 1st Jan 2020, Ankita sells goods for 5 lakh to Bhavika and draws a bill at 3 months for the amount. Bhavika accepts it and returns it back. On 1st March 2020, Bhavika retires her acceptance under rebate for 12% per annum. Record the transactions in the journal of Ankita and Bhavika. Do you want me to do this question now or can I give this as homework?
Homework, sir.
Same question, no change, guys. What we did just now, A and B. Same A and B. Only thing is amount is different. There the amount was 10,000. Here the amount was 10,000 rupees. There the amount is 5 lakh. Here the interest involved is 6% per annum. Here it is 12%. That's the only thing. Rest all is the same. So can you take this as homework, my dear friends? Hello.
Yes, sir.
Sir.
Yes, sir.
Fourth one we'll just skip as of now. We'll go to the fifth question. On 1st Jan 2020, Vilas draws a bill of exchange 10,000 due for payment after 3 months on Eknath. Eknath accepts this bill of exchange. On 4th March 2020, Eknath retires the bill of exchange at discount of 12%. You are asked to show the entries in books of Eknath. 5th question, the entries in book of Eknath. And 6th question, the same question, you have to pass the entry in the books of Vilas. Guys, 5th question, 6th question, both are same. So in 5th question, they are asking you to pass the entries in books of Eknath. Who's Eknath? Who's Vilas?
Vilas is seller.
Seller. Eknath is
Buyer.
buyer. So in
Buyer.
5th question, in the 5th question, they are asking you to record the entries in books of Eknath. In 6th question, they are asking you to record the entry in book of Vilas. That's all, guys. So this 2 question, doable or not doable? Yes, both are homework. Or can I give you a time now? I'll give you 10 minutes now. Can you finish off both the homeworks now itself? What do you say? So that if you have any doubts, I can clarify it now itself. What do you say? Can I give this time?
Do it now.
3, 4, 5. All the 3 can you do it now? Quickly, guys. I'll give you 10 minutes of time. So date of bill is 1 Jan 20. 3 months means February, March, April. So 4th of April 2020. The payment is made on 1st of March 2020. So guys, how many months early the payment is made?
1 month.
1 month early. So I have a question to all of you. Is it exact 1 month or is it exact 1 month plus 3 days? So now will you have to calculate, or do you have to calculate the rebate in terms of days? That will you calculate the days and do it, or will you calculate in months only and do it?
Months.
Do it months, don't get into days, because when it is given months, no, don't get into the day calculation. Had they told you the bill is drawn for 90 days, 60 days, then you have to calculate the interest and rebate for the exact days. But here it is everything in month. So I know there is a difference here. Here it is 1 March, here it is 4 April. There's a difference of 1 month and 3 days. So don't get into all the days. You have to calculate the interest only for 1 month. So what is the sale entry? Debtor to sale, Bhavika to sale 5 lakh. We are reversing the debtor and recreating the bills receivable. And we are making the early payment on 1st of March. So what is the rebate that we are getting? 5 lakh into 12% into 1 by 12. So that is 5,000. So so the bill what you are settling, you're giving the bill worth 5 lakh, against which you're receiving only 595. So remaining 5,000 what you're not receiving is the loss. So rebate on bill account, or you can say rebate allowed account. Rebate allowed. Allowed means loss. We are allowing, for us it is loss, we are not receiving the money. Rebate received means gain. So this is loss, debit all expense and losses. The same thing for Ankita. Purchase account debit to creditor. Reverse the creditor and record the bills payable. And on March 1, we're making the early payment. So we are settling the liability to the extent of 5 lakh rupees, but the money that actually you're paying is 495. So balance 5,000, what you're not paying is basically your income and gain. So this is to rebate received. That's all, people. Any problem? So why I wanted to do this question now is because when you do this question at home, you might have a doubt, sir, here it is 1 March, it is 4 April. So should I calculate interest for 1 month and 3 days, or should I do just approximately for 1 month? So for that reason, I asked you to solve this question now. Guys, are you clear? What is the problematic point in the third question?
Yes, sir.
Yes, sir.
People responded. Nice, all enjoying. Nice.
Yes, sir.
Yes, sir.
Sir.
Okay. Fifth question. Fifth question, I think you can manage, guys. Fifth question is not a problem. Fifth question says that on 4th March, the bill is retired. And the due date is 4th April. So this you will not have a problem, guys. This is homework. This I'm giving homework. You do it later. No problem. So my target, guys, is this question. And with this, I'll be done. So can we do 4th question and wrap up today's session? Hello.
Yes,
Yes,
sir.
sir.
Very interesting question, very tricky question, proper foundation level question. So this question is being covered from your ICI study module. And the very same question was asked, guys, in the RTP revision test paper November 2018 attempt. And the same question was again asked in mock test paper as a mock test paper in October 2019. So very, very important question. Please mark this question highly important. Guys, I want everyone to concentrate. Only then I'll go forward. Do I have attention of all the people? Aditya, Akshara,
Yes, sir.
Riza,
Yes.
Disha, Gunapati, Janardhan, Jivika, Karunya, Mokshita,
Yes.
Yes, sir.
Yes, sir.
Navya, Akash, Sai Sanjay, Selena,
Yes, sir.
Srinidhi,
Yes,
Subiksha,
sir.
Swati. Excellent, excellent. Now, people, last question of the day. So, full concentration. Very, very important question. Journalize the following transaction in Katrak's book. So, we are accountant of K. Katrak. So, all the 4 different scenarios being given, we have to account from the point of view of Katrak. So, the first question, listen to me very, very carefully. The first question says that Katrak's acceptance to Basu, Katrak's acceptance to Basu for 2,500 discharged by a cash payment of rupees 1,000 and a new bill for the balance plus 50 rupees interest. So my question to all of you guys, who is Katrak and who is Basu in this transaction?
Katrak is the buyer.
So
How do you say
Katrak
Katrak is buyer?
Because
Because
He accepted.
Yes, Katrak's acceptance. So who gives acceptance in case of bill of exchange? Buyer gives the acceptance. So he is the buyer. So who is Basu? Seller. What is the value of the transaction involved? 2,500. So 2,500 is discharged by cash payment of 1,000 rupees. Cash payment of 1,000 rupees and a new bill for the balance. So out of 2,500, if 1,000 is paid, what is the balance?
1,500.
1,500 is balance plus 50 rupees interest. So what is the new total value? 1,550.
1,550.
For this 1,550, a new bill is being created. So this is what concept?
For credit period interest.
This is which concept?
Renewal of the
It is
renewal
the
of
concept of renewal of the bill. Excellent. Rightly said. Now, my question to all of you is that what entry should I pass? Should I pass all the entry that Katrak has been purchasing from Basu and the conversion of bills of exchange entry? Everything should I pass? Or just the renewal of bill event is there? No, when this drama is happening, that is Katrak's, is discharging by making a payment of 1,000 rupees and a new bill is created. Only transactions pertaining to that should be recorded, or everything full-fledged we have to record.
So I think everything should be recorded.
So now again, this will depend on the kind of marks is allocated. Let's suppose this question is, let's suppose for 6 marks, then each question is 2 marks. In that case, you cannot sit and write the full history. So you have to focus on the main transaction. So this line, if is for this question is for 2 marks, and if this line is focused, it is focusing on the concept of renewal of bill. So what will I record? I'll record the concept of bill of exchange pertaining to renewal. So now let's do this question. Now here the entry what they've given is in a very confused state. We will stick on to the rule that we have agreed. Now, for our knowledge and experience purpose, let's do the entry from the beginning, but it is not required. So guys, we are recording from Katrak's point of view. So Katrak is buyer or seller? You agreed, buyer. So buyer means what will be the purchase entry on date of purchase?
purchase to
Basu.
Purchase account debit to Vasu. Vasu or Basu?
Basu.
Basu. Okay. Value is 2,500, 2,500. On date of bill of exchange, it will be Basu account debit to bills payable 2,500, 2,500. On the date of maturity, guys, on the date of maturity, what is happening? The bill has been cancelled. The bill is cancelled and 1,000 rupees is paid. And for the balance amount, you are recording interest. So first I need to cancel the bill. So what is the bill cancellation entry? I need to cancel the bill 2,500 to Basu 2,500. Yes or no? Hello.
Yes, sir.
So Basu account is opened here. Basu account is closed here. Bills payable account is opened here. Bills payable account is closed here. So what is open now? Basu is only open. So on the date of maturity again, Basu is giving you a payment of 1,000 rupees. So can I say it will be Basu? Sorry, we are making the payment to Basu. We are making the payment to Basu how much? 1,000 rupees. So we have to pay Basu 2,500. In that we are paying 1,000 rupees. So to that extent, my liability will be reversed. So Basu account debit 1,000 to cash 1,000 rupees. Yes or no? So what is the balance amount that I have to pay to Basu? Hello. What is the balance amount that I have to pay to Basu?
1,500.
1,500. Now there is an interest element involved. So on the date of maturity, we have to pass a due entry for interest. So what is the interest entry will be? We have to pay interest or we have to receive interest. Prathik has to pay interest or receive interest. Yes, Prathik has to pay interest or receive interest. Fast.
Pay interest.
Pay interest. So pay interest means income or expense.
Expense.
Interest expense account debit to what? I have to make this payment to whom?
Basu.
Basu. So 50 and 50. Now guys, how much we have to totally pay to Basu? How much is pending?
So 1,500 is pending and totally we should pay 1,500.
1,500 bill value pending. Sir, 50 interest is pending. So 1,550. So they are creating a new bill for the balance amount of 1,500 and plus 50 rupees interest. So on the date of maturity, you will create a bill. So this is bill payable or bill receivable? You have to make payment to Basu or you have to receive money from Basu?
Make payment.
Make payment. So to bills payable how much? 1,550 and debit will be what? We are closing the creditor. So Basu account debit 1,550 to bills payable 1,550. Any problem? Any problem, my dear friends? Hello.
No, sir.
No, sir.
No, sir.
Now what they are doing, we have to observe. Okay. Now what they are doing is they are not passing a multiple entry. They are passing a compound entry for all the entries together. So listen to me very, very carefully. What they are doing is they are passing a combined entry for all this put together. They are passing a combined entry for all this put together. Now listen to me very carefully. Here, bills payable account 2,500 is debited. So this is nothing but cancellation of old bill. Are you able to follow? So they have recorded this. Then interest account 50 rupees they have debited. Interest account 50 rupees is debited. Guys, any problem?
No, sir.
No, sir.
To cash 1,000 rupees. To cash 1,000 rupees. And two bills payable 1,550. Two bills payable 1,550. So what have they done? If you observe, guys, please observe only this 4 transaction. What have they missed out? Guys, they have missed out Basu, 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 Basu. So let's take all the yellow ones, guys. Please tell me. Take this yellow ones. Look at what they have done. Take the yellow ones. Basu is currently 2,500. Credit or debit?
Credit.
Credit, positive. Here, Basu is 1,000 rupees. Credit or debit?
Debit.
Debit.
Debit. So what is the balance?
1,500.
1,500. We have to pay him so much. Here, Basu, how much we are supposed to pay? Credit. It is 50 rupees in credit. 50 rupees credit. So now how much totally we have to pay him?
1,550.
1,550, which is credit positive, correct? And here Basu is debited how much? 1,550 debit minus. Debit minus. So what is the balance in Basu's account?
0.
Zero. So what they've done is they've combined all this 4 entry. The 1 entry, 2 entry, 3 entry, and the 4th entry, they've combined it. So when you combine all this 4 entry, Basu debit, if you do the total of this, guys, if you do the total of Basu debit, Basu is 1,000 here debit, Basu is 1,550. Can you please total this? Basu debit, please tell me the total of debit. Basu debit 1,000 here and Basu debit 1,550 here. So what is the total debit in Basu?
2,550.
2,550. And they have credited Basu here 2,500 here, 2,500 here, and credited Basu here 50 rupees. How much?
2,550.
So debit also 2,550, credit also 2,550. So Basu's account balance is 0. That is why Basu is not coming here, because the Basu account in debit and credit, the amount is same, it is nullified. So all the other accounts which is having balance, all the other accounts which is having balance, which is bills payable reversal account, cash payment entry, interest expense entry, and bills payable new creation entry, all this is the remaining account of the ledger journal entry, which is coming together as a compound entry, as a compound combined entry. Now you will not be able to understand this unless and until you understand the basic, guys. If this basic is not clear, it is very difficult. Now you may ask, sir, in exam, what am I supposed to do? Should I record a combined entry? So if the same question, guys, if the very same question like this comes, I would suggest you to pass a combined entry, because this is what is expected in the ICI study module, MTP and RTP. This is the answer that has been given. Otherwise, we can take a risk of doing these 4 entries together. Guys, purchase entry not required. Basu bills payable entry is not required. You just focus on the language of the question. No, the language is what? On the due date, the bill was not honored. Therefore, on that date, only 1,000 rupees is paid. For the balance, 1,500, interest is recorded. So if you see, the entire question is revolving around the concept of cancellation of bill to the creation of new bill. If you look at the language of the question, it is focusing right from the cancellation of the bill entry to the creation of new bill. So these 4 entries, you can write it individually also, but I feel it is a bit risky situation. You can write the one which is given in the textbook. But if you feel, no, sir, this is very complicated, I don't want to do it, I want to take the risk and do the 4 individual entries, you are very well allowed to do it. Now tell me what problem or difficulty you're facing. Guys, if this question is not understood the way I'm explaining, it will be very difficult. So please tell me, what is your problem?
Sir,
Yes, boss.
so the compound entry is, it's okay, sir, it's understandable. But my question is, can we like debit bills payable on bills payable account itself? Like if you see the compound entry,
Wait.
like,
Bills payable account. This is a separate bills payable 1 account, and this is a bills
okay,
payable 2 account. Both are
okay.
2 different
So
ledger.
it's okay.
Your question is valid.
Yeah.
Why you had a doubt? Because sir, this is also bills payable account. This is a bills payable. Both ledger are same. How can in one journal entry 2 ledger come? Same ledger come is your point, right? But this is bills
Yes.
payable 1. This is the cancellation of old bill. That's why I have this habit of putting 1. If you remember, starting say.
Yeah.
Why? Because 1 indicates a different ledger and 2 indicates a different ledger. So you got it
So
right.
we can like,
Yeah.
mention 1 and 2.
Yes.
Then
That's always
another
advisable.
thing is, we can just directly minus the cash from bills payable account. We don't have to like reduce the credit
I didn't
card.
get. Come again.
Sir, this bills payable account is like a liability. We can just reduce the liability by 1,000 by like debiting cash.
Correct. So here, see here, if you really want to understand what has happened, so actually the liability that you're reversing is 2,500, which means this is the money that you have to pay to the opposite party, Basu, plus 50 rupees. So 2,550 you have to pay. In that cash, 1,000 you're paying. For balance 1,550, there's a bills payable.
Yes, sir. Like till now, till the sums that we have paid, we have like just only the cash payment or cash received just affects the debtor or creditor's account. So I
I
was
mean,
not
we
sure
did it individually, you're
if it can
saying.
directly go. Yeah, I was not sure if it can directly go to bills payable and bills receivable.
See, ideally, it is not expected. When I did this very first question for, a couple of years ago when I started foundation, I saw this entry. When I was like flabbergasted, like how this entry came. Then I understood eventually they have merged all the entry. There is no need to do the merging of the entries because when you write it individually, it looks better, in terms of understanding also. But here, what happened is this question is for, let's say, 2 mark. So there is no point in doing so many entries. Just to cut short the time period, they have given a concept of combining the entries. And second thing of doing a combined entry is to test that as a chart accountant, how much you are able to understand, how much are you able, how much are you in position to understand a compound entry is being played. So this entry in first instance is very difficult to digest. But if you are very good in your basics, if you understand how a combination of journal entry works, then this is a cakewalk. So this is a test of your proficiency also. Very tricky, but yeah.
Sir, not tricky, sir. It's easy only. But this new concept.
I'm glad that you're liking it. You're finding it very interesting. But in first shot, it is definitely a tricky one. Oh, hello. I explained it in a so easy way. Huh? So you thought this is nothing. Now just imagine if this entry is there and nobody is there to explain, then what will you do? I missed it. I should have given this question as homework. And I'm pretty sure this night you would have worked out this question head and tail also you wouldn't have understand. Then you would have understood the importance of Pratik sir. I made your life more easy. No, Saviksha?
Yeah, sir.
Okay, others, how do you find this question? Fine, or can I go forward to the next question? Hello?
It's fine, sir.
No, I'm telling you, nobody is listening. Everybody is gone. Wait, I'm telling you. Physically present, mentally absent. Physically present, mentally absent. Hello? Nobody is responding. See?
No, sir. Wait.
No, sir.
Only 4 people responded.
Yes, sir.
Others?
Yes, sir.
See. Only 4-5 people responding. Others are sleeping. I'm telling you. Swati, Srinidhi,
No, sir.
Helena,
No, sir.
Karunya,
No, sir.
Yogi, Vikashni.
No, sir.
Okay. Can you go to second question, people? Hello.
Yes,
The faster
sir.
you respond, the faster we'll go. Now I'll keep on asking the question. I'll keep on dragging the question. Next, G. Gupta's acceptance for 4,000, which was endorsed by Katrak to M. Mehta, was dishonored. Mehta paid 20 as noting charges. Bill withdrawn against check. My goodness. Bill withdrawn against check. Now, people, who is Gupta? Who is Katrak? Who is Mehta? Gupta's acceptance.
So Gupta is buyer, Khatrak is seller, Mehta is endorser.
Gupta is buyer. Gupta's acceptance for 4,000, which was endorsed by Katrak. So, who is Katrak?
Seller.
Seller.
Who is Mehta? Endorsee.
Endorsee.
If you look at the diagram, Katrak, seller, Gupta, buyer, Mehta, endorsee. So Katrak sold goods to Gupta. Gupta gave the acceptance, bill of exchange, acceptance, and then Katrak has endorsed. Katrak has endorsed this to Mehta, and on the due date, the bill was dishonored. So who's the holder of the bill? Who's the holder of the bill?
Mehta.
Who's the holder of the bill?
Mehta, sir.
Mehta is the holder of the bill. So who has taken the notary public along with him?
Gupta.
Mehta.
Who took along?
Mehta.
Mehta would have taken the notary public to Gupta and got the facts recorded. Who paid the amount to the notary public? 20 rupees as noting charge. Who paid?
Mehta.
Mehta paid. So Mehta, will he bear the expense or will he recover from somebody else?
You will recover from Khatrak and Khatrak will in turn recover from Gupta.
Very good. Wonderful. Now we are recording entries in books of whom? We are recording entries in whose book, boss?
Katrak.
Katrak. So now, what entry you pass? So this is a case of dishonorment entry, guys. So you don't have to write the sale entry. This is not required. Sale entry is not required. Bill acceptance entry is not required. Endorsement entry is not required. Dishonorment entry is the main focus. So guys, when dishonorment is happening, what will happen? We have to recreate the creditor. So for Katrak, Mehta is creditor. So please tell me what is the dishonorment entry for Katrak?
Sir, he need to recreate Gupta.
See, if you look at this question, they are basically focusing on the dishonorment. So dishonorment, then subsequently bill withdrawn against check. Now this is important. Now, what is bill withdrawn against check?
Don't know, sir.
Twist ball. Take a highlight this point. I'll tell you what it is. Okay, we'll go in order. What is the sale entry? For Katrak sale, what is the sale entry? Fast.
Gupta to sales.
Gupta to sale. What value? 4,000. What is the second entry?
Receivable to Gupta.
How much? 4,000, 4,000. Then endorsement entry. What is endorsement entry? Third one. Mehta account debit to? Hello. Mehta account debit to?
Bills receivable.
Bills receivable 4,000. So if you look at this, Gupta account opened, Gupta account closed. Bills receivable account opened, bills receivable account closed. Mehta opened when at the time of purchase from Mehta. Now Mehta also closed. Now what happened? Dishonorment is happening. Now this is the entry that you write. Okay, so on dishonorment, what will happen? You close Mehta's account thinking that the payment is made. Is the payment gone to Mehta? Is payment gone to Mehta? Mehta is Katrak creditor. Is payment gone to creditor?
No, sir.
No,
No. So we have
sir.
to recreate creditor. So to recreate Mehta, I will debit Mehta or credit Mehta?
Credit Mehta.
To Mehta. How much amount? How much money we have to pay to Mehta? Sir, 4,000 towards the bill value and 20,000 towards noting charges. Now you will ask, sir, this 4,000 is the sale between Katrak and Gupta. Why 4,000? Arey Baba, the transaction between Katrak and Gupta is for 4,000, no doubt. There was a previous transaction between Katrak and Mehta for 4,000. That is why the same bill has been endorsed. So the value between Katrak and Mehta is also 4,000 only. So now we have to recreate Mehta. But we have to pay Mehta not only 4,000. We have to reimburse him the noting charges. No. So 4,020 rupees you have to pay. Now you tell me, we have closed here Gupta's account as if the money is come. Did you receive money? Hello?
No, sir.
So you have to receive money from Gupta. So Gupta account debit, because we have to receive the money from him. To create asset, we have to debit. So Gupta account debit. How much money will you recover from Gupta now? 4,020. So first entry, guys, in the second case, the first entry is Gupta to Mehta 420, sorry, 4,020, not 420. 4,020 to 4,020. Okay, not okay.
Okay, sir.
Okay, sir.
Okay,
Bill withdrawn against check. My question goes to all of you. When the bill was dishonored, who was the holder of the bill?
Mehta's.
Mehta was holder of the bill. So if I withdraw the bill, if I take the bill, from whom will I take the bill?
Mehta.
Mehta, from Mehta, bill will be taken. Who will take bill from Mehta? Mehta is the holder of the bill, people. So somebody has to, so Mehta will come and throw back the bill on whose face?
Katrak.
Katrak's face. So Katrak is the receiver of bill. So when Katrak was getting this bill back, that procedure is called as bill withdrawn. So bill withdrawn means what? The bill was taken back by Katrak against check, which means what? He took the bill, he make the payment. So what can I say? After this entry, Mehta started fighting with Katrak. Katrak had no other option but to make the payment to Mehta. So if I'm making the payment to Mehta, what is the journal entry?
Mehta to bank.
Mehta account debit to bank. 4020 4020. So this brings the second entry. Mehta to bank 4020 4020. Now you're able to understand. So the entire question is revolving around, guys, dishonorment entry. So journalize the following transaction in Qatar books in the case of dishonorment. They should have given that word to make our life easy. But why will they make our life easy? Correct, no? So please take a highlighter and highlight this point. Bill withdrawn against check. Bill withdrawn against check is nothing but Qatar has taken bill. Qatar has withdrawn the bill from Mehta by making him the payment in check. Bill withdrawn against check means, please write in your language. Please make a note. Qatar cancelled the bill by making the payment. So bill withdrawn against check is basically this entry. Payment to Mehta on withdrawal of bill earlier received from Gupta. So this is the payment entry. That's how it means. There's only 2 more questions, then we're done. Hello. No response. One person left the meeting also. Who's that? Nonsense.
Sir, we can do.
2 more questions, guys. That's all. We'll be done. Very easy. No energy. I'm not getting energy. If you talk, if you give me some motivation, I'll go forward.
Sir, we can proceed.
Others?
Yes, sir, we can proceed.
Yes, sir.
Very good. Now, Dalal retires a bill for 2000 drawn on him by Katrak at discount of 10 rupees. Dalal retires the bill for 2000 drawn on him by Katrak. So, guys, who is Dalal? Who is Katrak? Who is buyer? Who is seller?
Sir, Dalal is buyer and Katrak is seller.
Okay, others?
Dalal is buyer and Katrak is seller.
Yes, sir.
Dalal is buyer, Katrak is seller because drawn by Katrak. So, who will draw bill? Seller. So, Dalal is buyer. So, buyer is retiring the bill 2000 rupees. So, retiring means early payment or late payment?
Early payment.
Early payment. Very good. So, for early payment, what is the journal entry? We are recording books of Katrak. So, Katrak is receiving amount or giving amount?
Receiving amount.
So, what is the journal entry for early receipt?
Sir, cash, debit, rebate allowed.
Cash account debit.
So
Now,
cash, debit, rebate, debit to bills received.
okay. Katrak is getting rebate or allowing rebate or giving rebate?
Allowing rebate. It's a loss.
Allowing.
It's a loss for him. So, yes, allowing rebate. Okay. So, it is rebate allowed account debit to Dalal. So, it is closing of debtor. So, my question to all of you is that, is it from 2000 rupees, 10 rupees discounted and balance 1990 is paid? Or is the bill value 2010 rupees in the 10 rupee discount given and balance 2000 is paid? Which is correct? First option or second option?
The first option.
First option, sir. First option.
Dalal retires bill for 2000. So the money what you're receiving is 2000 or 1990?
1990.
Because the language very clearly says that Dalal retires bill worth 2000 rupees. So 2000 is worth of the bill. In that 10 rupees is discount. So what is the money received? 1990. Yes, are you able to understand? Hello?
Yes, sir. Yes, sir.
Yes, sir.
So the bill that is settled. Wait. We cannot put Dalal here. We cannot put Dalal here. Mistake. Oh, hello. That's why I told you. You always have to do the full step. In rough column, if you get confused, do it. Please tell me, when goods were sold to Dalal, what is the sale entry?
Dalal to sale.
Dalal to sale. And then when bill of exchange is executed, what is the entry?
Bills receivable to Dalal.
Bills receivable to Dalal. So can I say Dalal account was knocked off here itself? So if you put Dalal again here, it will be wrong. So which account is open here? Bills receivable is open now. So we have to close bills receivable only. Nobody said anything. I put Dalal, everybody said okay. Very bad. No concentration. This was to test all of you, whether you knew or not. Karun is like, sir, you say anything you want to say, sir. We are not listening to you, sir. Navya is like, sir,
Sir,
anything, sir, we are not listening.
I told bills receivable only, sir. You wrote Dalal.
You said bills receivable, you should say loudly, no? 2000, rebate allowed is how much? 10 rupees, cash received is 1990. 1990. 1 day extra means 1991, my year of birth. Oh shit, I revealed my year of birth. Shah. Now.
You are 32 years old, sir.
Yeah, Chuman. I'm not 32 years old. I said wrongly. I am only
Sir,
3 to 4 years elder than
when
all of
I-
you. That's it.
Sir, when I came first day, you were like, I am in my 30s. So you're
That and all you should not
32.
listen. Leave it. I'm only 3 to 4 years elder than all of you guys. That's it. Do I have white hair?
Yes,
Smart,
sir.
young, and dashing. So no concentrating on all that. Now concentrate on the fourth question. Fourth question is a very, very tricky question. I'm coming. 10 minutes. I'm done. My son is calling. Okay, anyways. Now guys, Katrak acceptance to Patel. Patel. For 5,000, discharged by Patel. Full stop. Modi's acceptance to Katrak for similar amount. What a question, man. When I saw this question
Sir,
for
we
the
are
very
like-
first time, clean bold. Solunga.
Sir, we just transfer, endorse the thing.
How do you say that?
Sir, yeah,
You saw the answer, no?
No, sir.
Where is the
Sir.
question about endorsement given here? How did you find
Sir.
out this endorsement?
They were like, it's similar amount. So what we do is we just endorse.
Okay. Katrak accepts acceptance to Patel for 5,000, discharged by Patel. Discharged by Patel. Okay. Modi's acceptance to Katrak for similar amount. So two different instances. So my dear friends, please tell me, first instance, between Katrak and Patel, who is buyer, who is seller? Are you reading
Sir.
something? Huh?
Katrak is buyer.
You're reading something?
No,
You had a biscuit now, no?
sir, biting my nails.
You're so hungry. Huh? You eat biscuit, karna, I have no problem. I'm not going to scold you. Don't eat nails and all. Very difficult to digest. Now, in the first instance, who is Katrak, who is Patel?
Patel, seller.
Katrak's acceptance. Katrak is acceptor. So who is he? Katrak.
Buyer.
Very good. Buyer. Only 2-3 people are enjoying nicely with me. Others are nicely sleeping. I know. Katrak is accepting. So he's a buyer. Patel.
Seller.
Who is Patel? Seller. Okay. Who will have to make payment to whom in that case? Will Katrak make the payment to Patel or Patel make payment to Katrak?
Katrak will make payment to Patel.
Then why have they told discharge by Patel? Then what is Patel discharging here?
He's
Katrak is
giving the
paying.
bill.
Sorry?
He's endorsing the bill to Modi.
If Katrak is making the payment to Patel, then what is Patel discharging? We have to understand. Next point. Modi's acceptance to Katrak for a similar amount. Modi's acceptance to Katrak for similar amount. Now tell me guys, Modi's acceptance to Katrak is a different transaction or is it a bill endorsed to Modi?
I think
Bill endorsed.
Bill endorsed.
Wrong. Oh, hello. Where did I tell you that in endorsement somebody has to give acceptance? If Modi is giving acceptance to Katrak, is it endorsement? Think and answer.
Sir, it's a dishonor, sir. First entry.
Where is the acceptance required? Hello?
Sir, first entry is a dishonorment, sir. Second is an endorsement, I think.
Wait. Katrak versus Patel is a different situation. Modi versus Katrak is a different situation. I'll come to endorsement little later. So Modi's acceptance to Katrak for a similar amount is a different situation. So let's understand.
So what is discharged?
This is Katrak. This is Patel. Patel, you can relate to some movie? Pattu. No? You don't know who's Pattu? You guys know anybody here Vijay's fan? What a waste of life. Bigil movie nobody's watched?
Sir, what, sir?
Bigil movie.
Yes, sir.
And the
Yes,
Bigil
sir.
police station scene is there, no?
Yes,
Pattu.
sir. Yes, sir.
Oh.
See.
Sir, that's Patel.
ஆமாடா பட்டேல் தான் பட்டு வாங்கின்றான்.
Oh, okay.
என்னம்மா? Now this is Katrak and Patel. So Katrak is what? Buyer. Patel is seller. So ulta I put it. Sorry. Sir, you concentrate here, sir. You don't concentrate on Pattu. You're writing ulta. Okay, accepted. This is Katrak. So Patel is seller. Katrak is buyer. Now for a very same amount, there is a transaction happening between Modi and Katrak. So here Modi is accepting. So Modi is my seller. So Modi, buyer, Katrak, seller. So here, guys, Katrak, so Patel. So who will make payment to whom? Patel will make payment to Katrak, or Katrak will make payment to Patel?
Katrak will make payment to Patel.
Patel sold goods to Katrak. So bill of exchange plus payment has to be done by Katrak to Patel. For Katrak to make the payment, he has to have the money. So he will receive money from whom? Modi. So Katrak has sold goods to Modi, and in return, Modi has to pay bill of exchange. Against bill of exchange, he has to make the payment. Okay, not okay.
Okay, sir.
Okay.
Now, look at the language. Katrak's acceptance to Patel for 5,000 discharged by Patel. So what discharging are they talking about?
Dishonorment,
No,
payment.
they're talking about discharging of the bill. So which means Patel is the holder of the bill. He's the holder of the bill. He's discharging the bill, which means Katrak is paying the money and Patel is discharging the bill. He's giving the bill back. So what is the honorment entry? What is the payment entry? For this transaction, what is the payment entry?
Bills payable.
In the books of Katrak. So in books of Katrak, for Katrak, Patel is a bills receivable or bills payable?
Bills payable.
So bills payable is closed. So what will be the entry?
Bills payable account to bank.
Bills payable account debit to bank. How much?
5,000.
5,000. 5,000. Now here from Modi, we are receiving the money. So what is the entry?
It's receivable.
Modi, like Katrak, from Katrak, Modi, from Modi, we had received money. It's bills receivable. So the money is received. The money is received. So what is the amount?
I think cash to bills receivable.
Bank to bills receivable or cash to bills receivable? Let's make it bank itself. So bank account debit to bills receivable, 5,000, 5,000. Okay, not okay.
Okay, sir.
Now what happens is both of these transactions are given. They're given together means, which means there is some link between this person and this person. If it is two individual transaction, they wouldn't have given it here. Like that, you have to assume. See, if you ask me personally, I would have recorded two entries separately and gone. But now when both of them given together, so what they've done is they've combined both the entries. If I combine this both entry, what will happen? Can I say bank 5,000? Bank 5,000 is knocked off. So what am I left with?
Bills payable and bills receivable.
Bills payable account debit to bills receivable. So what is the narration? Bills payable from Modi endorsed to Patel in settlement of bills payable issued to him earlier. Now people look at this word endorsement and said, sir, endorsement, endorsement. But how endorsement you understood?
Sir, I have a doubt.
Yes, boss.
Sir, like, the Modi didn't pay us usually.
Sorry?
Like Modi's that bills receivable thing, he just accepted it. He didn't pay it, right?
No, the problem why you're having here is because the language is not complete. That's why you're feeling. If you look at the answer, it is money received. So we have to interpret in certain way. Unfortunately, the language is not clear why the confusion is there. So here, Modi's acceptance to Katrak for a similar amount. So here they should have told that Modi's bill, what we have received, Modi's bill is basically endorsed to Patel. And the amount is knocked off. The situation, actually, if you combine these both situation, no, it is like this. Katrak here, Modi here, and what is this guy's name? Patel. So what happens is Katrak is sold goods to Modi. Modi is given a bill of exchange. So this bill of exchange has been endorsed to Patel. Why are we giving the payment to Patel? Because Patel has sold goods to Katrak or Katrak is purchased from Patel. So what happens? The payment is knocked off with each other. This is how been done here. So basically it's a payment, two separate payment settlement entry. Now here in your textbook, they've combined and given it. Now you may have a question that, sir, if you write two separate entries, is it okay? No, because this is given in relation to the other one. It is given in relation to the other one. So you have to knock off the amount with each other in the very same way. That's why I told you this is a unique question. And whenever you come across the very same question, it is better you do it in the very same way. Otherwise, if the question is given in different way that we have done so far, we'll do it in that way only. Now here, little bit, we have to deviate from what we are doing. And these two entries are recorded in this way. This is slightly challenging. We'll take some time. We have no problem. So please tell me what problem you're facing here. The question should have been completed. Basically, they're telling that Modi has accepted some amount to Katrak for amount of 5,000 rupees. And this 5,000 rupees is basically endorsed to Patel for payment. This is how the question should have been framed. Unfortunately, the language what they've given is not appropriate. But when you go and look at the answer, what are they trying to say? There is a bill that is received from Modi. And that bill has been endorsed to Patel in settlement of the bills payable issued to him earlier. Now, from Katrak's point of view, what happened? The bill is basically endorsed to other party. So in Katrak's books of account, this is Katrak in relation to Modi. And this is Katrak book in relation to Patel. Now, please understand, Katrak has sold goods to Modi. What will be the sale entry, people? Just guess this, just focus. This should give you clarity. Tell me what is the sale entry? Modi account debit to sale. And Katrak is purchased from Patel. So what will be the entry? Purchase account debit to Patel. Amount is same, okay? Then there is a bill of exchange executed. So bills receivable to Modi. And here it is.
Patel to
Bills payable. So here can I say Modi knocked off, Patel knocked off. Now guys, on the maturity date, on the due date, the bill has been honored. So Katrak will record the receipt entry. What will be the receipt entry? Cash account debit or bank account debit to bills receivable. And here he is making the payment to Patel. So what happens? Bills payable account debit. We are closing the liability by making the payment. But are we encashing the bill and making the payment to Patel, or are we endorsing it? Guys, my question goes to all of you. Am I encashing the bill myself? Am I giving the bill to Modi and getting the money? And am I giving the money back to Patel, or am I just endorsing the bill? If I'm individually collecting the money and if I'm individually paying the money, then two separate entry makes sense. But here, I am not collecting the money separately. I'm not making the payment separately. So what am I doing? I'm combining the entry. So cash and cash is knocked off. So what is the combined entry? Third entry. I'm combining the third entry. What will happen? Bills payable to bills receivable. BP to BR. Are you able to follow? Which means an asset is knocked off against the bills payable. So asset is knocked off against the bills payable. So bills receivable is cancelled by putting in credit and bills payable is cancelled by putting in debit. So we're knocking off a receivable against a payable. This is what the entry means. Now tell me clear or not clear.
Yes.
Mark this question
Yes,
fourth one. Very, very tricky, very, confusing question. In the beginning, when you do by yourself, now you should have got a clarity. Please mark this question. And I'm 100% telling you, definitely in between or before the exam, when you do this question by yourself, you might have a doubt and you might want to refer this video. So please mark the video number and also keep it. Do not hesitate to watch this video one more time. Now you might feel it, it's fine to understand, but somewhere you'll have a doubt. So mark this video. You have to rewatch this video one more time to get a clarity. Why I'm telling? Because we are at the fag end of the class. We have started the class almost at 5:40. It's now 8:40. It's been a 3-hour long session. So definitely by now your brain is fully tired. So definitely whatever I said, would have gone into mind in bits and parts. I'm telling you, it's normal. Right? So please mark this and do this question at least 3 to 4 times before the exam, so that if a similar question comes, you'll not struggle. The fourth question would have made easy. The fourth point or the fourth transaction would have become easy had they told that the Modi's bill has been endorsed to Qatar. If one sentence was given, no, things would have been easy. The problem is Qatar's acceptance to Patel for 5,000 is a different sentence, full stop. And Modi's acceptance to Qatar for similar amount, the question itself is half, given. So the question is not understood properly. But when you read the ledger, when you read the journal narration, that it makes sense. Acha, this has been endorsed. So this is the problem in the language of the question. Unfortunately, we cannot help. And the same question is repeated 2 times in RTP and MTP people. So we cannot go and fight with ICI telling that the language is not proper. It is not clearly understandable. That's unfortunate. So we have to deal with the question in this way only. Any problem? So all the entire 4 transaction guys of this question was revolving around the dishonorment entry and onwards. Except the third one. I think third one is for retirement concepts, but first, second, and the fourth one was somewhere, nearing the dishonorment concept. Okay? Not okay. Aditya, Akshara, Akash, Driza, Disha, Gunapri.
Okay, sir.
Janardhan,
Okay, sir.
Deepika, Karunya, Mokshita, Navya.
Okay, sir.
Sai, Sanjay,
Okay,
Sharina,
sir.
Okay, sir.
Srinidhi, Subiksha, Yogi. Okay, not okay?
Okay, sir.
Okay, sir.
Fantastic. So let's wrap up here, guys. So that's all from my side for today's session. I'll see you all in the next class, guys, which is again on Saturday morning, right? 10:30 a.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, people. Thank you.
Thank you, sir. Thank you, sir.
Thank you. Thank you. Thank you.